this has to be, financial statement has to be free from material misstatement. Now, when it comes to determining whether a particular statement is material or not, we should look that thing into the entire gambit of the financial statement. One particular assertion might seem to be immaterial, but when we combine all the immaterial misstatements, then the overall impact might be material on the financial statements. So we should, try to compile and jot down all the immaterial misstatements in a sheet of a paper or in an electronic form, and see whether the aggregate impact of all the seemingly immaterial misstatement has a pervasive effect on the financial statements or not. And of course, auditors are required to report and communicate whether they have followed the standards on auditing or not. Some of the Okay. Now, this slide speaks about the compliance with the standards on auditing. Many of the standards on auditing may not be relevant to the particular auditee. Let's take an example for related party transactions. So, entity does not have any related party relationship or does not enter into a related party transaction, then the particular assay, which is 550, would not be applicable to the entity. So it is not so that all the assays has to be relevant. The assays, particular assays may not be relevant to the auditee. As an auditor would do a word of good for themselves if they have an understanding of the entire text of an essay, which is also supplemented by the application and other explanatory material as well, which has an equal force and which gives a better understanding of the core text of the standards on auditing. And in an audit report, the auditor is required to report whether they have followed all the relevant assays, and auditor should refrain from commenting that they have followed assays, in fact, if they have not done so. The comply with each requirement of an essay unless if in the circumstances of the audit the essay is not relevant, as I given an example of essay 550, or the requirement is not relevant because it is conditional and condition does not exist. Say for example, internal audit function. Now the smaller entities do not require to have an internal audit team or internal audit function as such. So SA 600 may not be relevant to them as well because the condition does not exist for the existence of the internal audit function. Coming to the agreement on the engagement terms, SA 210, which is extremely critical for the any audit engagement. I would, in my view, before starting any audit engagement, auditor must ask from the management in writing to confirm the engagement terms, so that at the later stage any misunderstanding insofar as engagement terms are concerned can be avoided. Auditor can very well, of course it has to prepare and submit his own understanding in form of an engagement letter, uh, delineating in a no unambiguous terms the responsibilities of the auditors, which areas the management would be responsible, what would be the framework in which the audit report would be issued, and engagement letter should also contain certain other things which are very much relevant in the current times, like electronic communication. So auditor also has to add a para in the engagement letter itself that the electronic communication would be considered as a communication in the entire audit exercise. So each party, auditee as well as auditor, would be individually responsible to safeguard for the data storage and to observe all the IT controls relevant to an audit. It should also be communicated that electronic communication may also be prone to computer viruses, and it has its own inherent threats as such. Further, another critical aspect that should be included in the engagement letter is the liability clause, under which circumstances auditor would be held liable. So it has to be clearly brought out in the engagement letter that the auditor would be liable for the dereliction of the duty and not for the other things like fraud which has remained undetected by the management itself. So it has to be clearly brought out. Another thing that can be included in the engagement letter is a composition of the audit team, and there has to be explicit statement that there does not exist any conflict of interest with the auditee. Termination clause can also be added, and it can also be stated that engagement can be terminated in certain circumstances, of course, subject to prevailing laws and regulations. Uh, in audit engagements, there may be a situation where the auditor is appointed for a period beyond 1 year. Say, for example, the auditor has been appointed for a period of 5 years. So it is not necessary that engagement letter has to be given each year. We can very well mention in the engagement letter itself that uh, engagement letter would not be issued every year, and this engagement letter would hold good for the entire period of the appointment, unless the circumstances warrants an auditor to revise the engagement letter as such. So, in this slide, there are certain indications that has been given where a revision in the engagement letter is warranted. For example, say for example, the entity or its management has misunderstood the objectives and the scope of the audit. There is a recent change in the senior management, and new management needs to be made apprised of what has been agreed upon between the auditor and auditee. Then in that case, a fresh engagement letter can be issued. When there is a significant change in the ownership, of course, there would be a need to issue a fresh engagement letter, and so on and so forth. Uh, Leadership responsibilities for quality on audit essay 220. This is a essay which is internal for the auditing, and it talks about the communication within the firm. So when any particular audit engagement has been assigned to a team, then a free and fair interaction and communication with the audit team is extremely crucial in order to ensure that the team understands the core quality objectives of the audit, and the team may be required to be made aware of the ethical requirements as well. And I would say in-house training to the audit team would be a need of an hour during these times to ensure that the audit team, say for example, many a times the particular task in the audit has been assigned to article clerk, and those articles being a little naive in their approach and knowledge, it becomes even more onerous on the part of the senior personnel to make them really understand and imbibe the quality objectives of the audit, what should be the professional behavior, what is the professional competence and due care that is expected from there. uh, I would also point out here that many a times what happens that senior personnel often gives takes a session, but a, opportunity needs to be given to the audit team to throw as many questions, whatever questions are there in their mind, no matter how bizarre those questions are, but uh, those questions need to be encouraged and needs to be answered so that entire audit team is on the one page about the expectations. Uh, This is again extremely crucial standards on auditing and of most, I would say, most ignored SA 230 audit documentation. If the members had an opportunity to go through the Quality Review Board's recent report for the 1920, many of the non-compliances have been hovering around this SA 230. Friends, we might be able to lend a good quality to the audit engagement. We might be able to, address many queries, and we ourselves are satisfied as to the quality of the audit that we have performed. But unless and until we have documented those things, then it would be presumed that this thing has not been carried out at all. So this is very important. At times, we encounter or we resolve many of the queries, and many of the pertinent queries have been raised to the management, but we fail to document how the resolution to those queries have occurred and what are our conclusions based on the resolution of those queries, that we normally fail to document those things. So I would suggest that documentation about the resolution and conclusion is extremely critical in order to demonstrate that the audit quality has not been hampered in any way. And even if the external agency is to review our audit file, then they would also be uh, uh, able to conclude this. Yeah, of course, the audit quality has indeed been maintained. Here, I would also mention that it is absolutely not necessary that a sophisticated form of documentation needs to be maintained. We can, document the relevant conclusions on a piece of paper, and that should also suffice, provided that it should be understandable to the external agency. Audit documentation can be in either electronic mode or in the paper form also. What is important here is that the proper chain of the entire audit documentation should be available at one place, so that without much efforts, external inspectors or external agency would be able to understand how the entire audit has been carried out. Of course, their audit documentation serves many additional purposes as well, assisting the engagement team to plan and perform the audit. It also makes the engagement team accountable for the tasks that they have performed, and it would, as I said, it would also help the external inspections with applicable legal, regulatory, and other requirements. This is the suggested flow of how the audit documentation has to be made. The timely preparation of audit documentation is of critical importance. Retention of the audit documentation, further assembly of the final audit file, and ownership of the audit documentation. So when we speak about the timely preparation of the audit documentation, starts as we know the audit programs. What are the analysis that we have carried out? Whether there are any significant matters that have been communicated with the management or those charged with the governance in the form of issues memoranda, letter of confirmation, representation checklist, and all these things. Uh, Retention of the audit documentation, as we know, we need to maintain the audit documentation for minimum 7 years. And another critical aspect and very significant aspect is the assembly of the final audit file. So, friends, once the final audit file has been assembled, it should not be tinkered with, or it should not be a compromise with or without any authorization. Once the final audit file has been assembled, it has been done. So no changes need to be made in the final audit file as such. And ownership of the audit documentation is, of course, the auditor is the owner of the audit documentation. It has to be clearly and explicitly should be communicated to the auditee client that this audit documentation would be the ownership of the auditor, and unless any regulatory authority would require uh, uh, to furnish the audit documentation, this would not be shared with the client as well. Communication with those charged with the governance. This is extremely important as such. Many a times, what happens that we have been interacting with the management of those charged with the governments, but that interaction is never minutized as such. So the oral interaction, whatever has transpired in the oral interaction, has to be minutized and has to be documented. And communication with those charged with the governance can be on the various aspects, like what are the auditor's responsibilities, what will be the plan, scope, and timing of the audit, what are the significant findings that have come auditor has come across from the audit, significant qualitative aspects regarding accounting policies, accounting estimates, who are responsible persons for framing the right accounting policies, accounting estimates as such. What are the significant difficulties that have been encountered during the audit? What could be the probable areas where the further improvement from the auditee side is required? That should also be mentioned. And again, we should reaffirm our independence in the communication as well. So I would say that a frequent interaction and a presentation in the PPT form to the community, to the person who are charged with the government is extremely important here. uh, Friends, I have not covered the essay on the accounting estimate as such, but many a times what happens that uh, say for example, the property, plant, and equipment has been fully depreciated, but still it is in use, and the commodity is making a continuous use of the already depreciated PPE. So as we know that standard on auditing on accounting estimate requires that estimates needs to be assessed annually or at regular intervals, if not annually. So if the asset is fully depreciated as such and it is still in use, I would say this is an error in estimate. We cannot keep a mum on that thing, and we should highlight this fact that this is an error in estimation and what is now the expected useful life of an asset. Coming to the 300 series, this is basically related to the risk assessment of an auditor. Auditor is responsible to make a risk assessment of the client and its environment. SA 300 speaks about the planning and audit of financial statement. 315, of course, is very important, identifying and assessing the risk. 320 materiality in planning, 330 auditors responses. Of all these things have to be documented time and again. I am pressing a need for a proper audit documentation for the simple reason that it would help in protecting the skin of the auditors going forward. Let's come to SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment. So, friends, it is not only important that we understand the business of the entity. We should also understand the environment in which it operates, whether it is a highly regulated entity, whether it is a niche, operates in a niche industry, or the entity selection and application of accounting policies, objectives and strategies and related business risk, and of course entities own internal control. This is very critical in order to gauge how much risk that auditor is carrying about the particular assertions in the financial statement. uh, Smaller companies, in case of smaller companies, the auditor is not required to issue a separate report on the internal financial control, but nevertheless it is equally important that auditor verify and test those internal financial controls. This is very much, IFCV is very much part and parcel of the internal controls only, and it has to be documented in a very explicit terms that these are the internal controls, that these are the weaknesses that have been identified, how those weaknesses have been remediated or mitigated by the management, and what are the perceived risk for the auditing exercise. So proper internal assessment of the internal control would facilitate auditor uh, to determine how much and to what extent the analytical procedures or the substantive procedures need to be performed on a particular audit. And special consideration has to be given to the indicators of the fraud risk. And of course, auditors are not required to detect the fraud as such, but whenever he come across any indication that fraud might exist in this particular area, then he needs to be a very vigilant on that aspect, and there needs to be communicated with a clear cut demarcation in the responsibility. Materiality in planning and performing an audit, SA 320. Friends, we know that fixation of materiality is the discretion and prerogative of the auditor. Auditor, based on its own assessment of the internal control, the environment in which the entity operates, needs to fix the materiality for a given audit engagement. The materiality can be fixed as a percentage on a PBT, profit before tax, revenues, gross profit. If it is a capital intensive industry, we can take a PPE base as well, total equity. But let me tell you, friends, that materiality has to be dynamic. It should not be so inflexible that when the circumstances warrants revision in the materiality, we must carry out the revision as the audit progresses. So it has to be very dynamic, and it should capture the relevant facts, circumstances, transactions, and events that have been encountered or auditor has come across during the audit process. Further, the materiality needs to be communicated to the management upfront for any audit engagement, and if there is any revision subsequently, then that revision also needs to be communicated uh, in writing. 500 series is again a very important series which speaks about the audit evidence. As I mentioned earlier, that QRB has issued a recent report where audit documentation has observed most of the non-compliances, and the second most non-compliant observed essay is audit evidence. So, friends, how do we approach an audit evidence as such? So, the foremost thing that we should observe and we should keep in mind to exercise the professional skepticism. to the whatever document that has been furnished to the auditee for his verification. Now, what we mean by the professional skepticism is a critical assessment of the audit evidence. It is not an investigation as such, but a critical assessment. We should keep open our alert mind, and we should uh, have a questioning mind as such. So here I would like to make a distinction between the audit evidence gathered in audit exercise and audit evidence gathered in the investigation. In the audit, whatever evidence has been produced in front of the auditor would start auditing exercise believing that this audit evidence is true, and then make a further critical assessment about the authenticity and reliability of the audit evidence. Vis-a-vis when the investigation is being carried out, that in investigation exercise, the investigator would start his investigation exercise believing that whatever evidence has been given to them is false. So they start with a negative set of mind, which is required also. So 505 is again external confirmation, which is very important. We'll take some of these essays in subsequent slides as well. Audit evidence 500. So as we know, friends, the auditor needs to obtain sufficient and appropriate audit evidence. Now, what is sufficient and what is appropriate audit evidence? Sufficiency talks about the quantity of the audit evidence. So, for example, if a bank statement has been furnished to an auditor, whether that would be a sufficient audit evidence? No, it would not, because a bank statement in its isolation would not give a level of comfort that the auditor would expect from the obtaining the audit evidence. So auditor would go further and ask for the balance confirmation from the bankers directly. Uh, if there is an FD with a shorter maturity, it would carry out the subsequent audit procedures, whether those FDs are subsequently realized or not, all those things. And appropriateness is all about the relevance and reliability of the audit evidence gathered. The one external confirmation SF 505. Friends, this is again a mandatory audit procedure. There is no headroom, there is no leeway given under this essay, barring few exceptions as such. Uh, External, as we know, external confirmation procedures are extremely important. But what is the most critical aspect in this entire external confirmation exercise is the who controls this entire external confirmation exercise, whether a client controls this entire procedure or the auditor controls this entire procedure. Ideally speaking, the external confirmation procedure, the entire gamut should be controlled by the auditor. Of course, the auditor can ask the auditee to issue a letter to the concerned parties seeking external confirmation from them, marking a copy to the auditor. And those responses need to be directly received by the auditor. It would not suffice that the external party has given a confirmation to the auditee, and an intern auditee uh, gives the confirmation or forwards that confirmation to the auditor. This would not be a conclusive audit evidence. It might be susceptible to a tampering also. So external confirmation would be extremely important. It would be in two forms: a positive confirmation request and negative confirmation request. Ideally speaking, positive confirmation has to be there, and unless and until it is so impracticable to obtain a positive confirmation, then only the negative confirmation should be resorted to. So, uh, uh, any, uh, At first stage, the auditor should ask for the positive confirmation request. If the positive confirmation has not been received within a reasonable time frame, then the auditor needs to follow up with those parties to furnish a confirmation about the outstanding balances. And even after carrying out the follow-ups and other exercises, still the confirmation is not received, then the auditor can consider a issuing a negative confirmation request. A negative confirmation in a sense that the entire ledger or entire transaction has been portrayed in a piece of paper, and there is a one line at the end of this ledger and transaction that unless and until you confirm these balances within the next 7 days, it would be presumed that these balances are correct. So this is a negative confirmation, and negative confirmation is normally solicited to elicit the response from the opposite party, from the counterparty. They would think that okay, if I do not give a response, this balance would be presumed as correct. So positive and negative, of course, negative confirmation would be a last resort, and it is a less persuasive audit evidence than the positive audit evidence. I would take an example of a telecom industry, say for Vodafone and Idea. So auditor is not expected to, issue positive confirmation to the all the customers, because there would be thousands, lakhs, millions of the customers, and it would be practically impossible to receive. And even if it is received, to compile and verify the positive confirmation request in that sense. So in this scenario, uh, I would say a subsequent recovery or subsequent payments to the debtors and creditors respectively assumes even greater importance. Now let's come to SA 520 analytical procedures. So, friends, analytical procedures, the auditor is expected to apply on each and every financial statement assertion. And let me tell you, friends, if the analytical procedures are applied properly, it would lead to a reduced substantive procedures that the auditor need to perform. Let's take an example of a petroleum industry. As we know that the petrol and diesel prices are always in the public domain, and if the quantity made available by the auditee has been verified thoroughly, then we can multiply that quantity with the sale price and determine what sale revenue should appear in the financial statement. It may not be very precise actually, but it would give an indication about the expected value of the sales revenue that should appear in the financial statement. And if that expected value is deviating enormously from the figure that is been appearing in the financial statement, then the auditor should apply a further audit procedures in the form of substantive audit procedure. So it would also help in assisting while forming an overall conclusion. But again, I would also press a need for a proper audit documentation in these analytical procedures also. Another example could be a data turnover ratio, for example. We can compare the trend of the data turnover ratio, and if the current year data turnover ratio is deviating a bit from the past trend, then it would give an indication whether some of the data are sticky, or whether the recovery is questionable, or whether adequate provision needs to be made. So analytical procedures would give us scope to the auditors to focus on the areas that are bit seemingly bit compromising. Audit sampling SA 530, again, choice or choosing a sampling audit sampling is a prerogative of the auditor, and it depends on the auditor's judgment. There are various methods of sampling. Random selection is there, systematic selection, haphazard selection. But what is important here is that whenever we choose a particular audit sample, of course, it has to be representative of the entire population, number one. Number two is that whenever any material misstatement is found in the audit sample itself, we should extrapolate that material misstatement to the entire population and see how the population is getting affected uh, uh, for uh, for for the presence of the material misstatement. And if there be a need, the sample size has to be increased accordingly. Uh, Another thing that I would like to highlight on in audit sampling is that it should not happen that we select the audit sample in a so random manner that it loses the veracity of the entire audit exercise. It should not so happen that let's verify the sales revenue for April month and March month, or let's verify for the any of the 2 months. We should keep in mind what is the business of an entity, how the sales transpires, whether the business is seasonal, or whether there are any months where the sales offtake is significant compared to other months. That those things should also be taken or kept into consideration while choosing an audit sample. Uh, SA 560 subsequent events. This is basically related to the procedures that the auditor is expected to carry out post balance sheet date. It essentially talks about the adjusting event and non-adjusting events. So, for example, what could be the adjusting events which would require certain adjustment in the financial statements. So as we know, during from the March 25, 2020, the lockdown has been imposed by the government, and the COVID situation was prevailing as of 31st March. So if the inventory is carried inventory valuation is carried out based on the price prevailing as of 31st March, and the subsequent sales in the April and May month has taken effect with a much reduced rate, then those adjustments need to be made into inventory carrying amount as of 31st March, because the condition was prevalent at the reporting date, which would require adjustment in the financial statement. So this would be treated as an adjusting event. But there are certain events which are non-adjusting in a nature, in a sense that they do not affect the assertions or the amounts in the financial statement as of reporting dates. Say, for example, the fire broke out in the month of May. Auditors is in knowledge of that thing. Base that can be done in this scenario is a proper disclosure, but not an adjustment in the financial statements. So, if any fresh or new development has occurred post reporting date, that need not be adjusted in the financial statement and appropriately needs to be disclosed in the financial statements. Going concern SF 570, again, very important in these COVID times. Friends, many of the relaxations has been given to the entities about the regulatory compliance, all those relevant matters. But as far as auditing is concerned, no relaxation in the performance of the audit procedures has been given to the auditor. So auditor needs to analyze and see whether on account of COVID or for other external extraneous factors, whether the going concern uh, concept or assumption has been jeopardized, or still the going concern assumption is appropriate. There can be many factors which needs to be looked into while making an assessment about the going concern. Of course, the primary responsibility of making the going concern assessment lies with the management. Auditor needs to prevail upon and insist on the management to carry out the going concern exercise if the circumstances warrant so. And idea generally, the management is expected to carry out that exercise for next 12 months. But if the auditor believes that next 12 month assessment about the going concern may not throw give a better picture, then auditor can also ask the management to go beyond 12 months and make an assessment for, let's say, for another 3 years or 5 years going forward. uh, so these are some of the factors that have been narrated in this particular slide, which might trigger a going concern assessment by the management. There are financial parameters, net liability, net current liability situation, a withdrawal of the financial support by the creditors, operating negative cash flows, adverse key financial ratios. There could be other operating factors also, loss of key management, major market, neighbor difficulties. But friends, let me tell you, okay, none of these factor uh, in its isolation would trigger a going concern assessment. We need to consider and take into consideration a holistic picture, how each and every factor affects cumulative the financial statements of an entity. If the financial statements of an entity has been impacted on account of prevalence of these factors, then going concern assessment needs to be made. And let's take an example that the company is in a serious liquidity crisis on account of withdrawal of a financial support by the lender, or there are negative net worths and financial ratios are in doldrums. Then we need to communicate and ask the management to uh, make an assessment and give us a concrete plan as to how these factors the management expects to mitigate. And up till the time of signing an audit report, how those mitigation plans have actually transpired, that thing also needs to be considered. And if the auditor concludes that the going concern is appropriate but the material uncertainty still exists, then a proper disclosure should be insisted in the financial statement. And auditor needs to draw a reference of that material uncertainty in the audit report, also in the form of a separate para stating material uncertainty related to going concern. That is a separate para, friends. It is not an emphasis of matter, and we need to give a comment about the adequacy of the disclosure that has been given in the note, and also state that okay, the disclosure has been made appropriately, but there are circumstances which exist which throws doubt, significant doubts on the going concern of the company going forward. If the auditor believes that a going concern is not appropriate and the financial statements have been prepared on the basis of going concern basis, auditor should simply give a adverse opinion. There should not be any compromise as such. An adverse opinion is to be issued. Let me, friends, take you one or two examples. Say, for example, the uh, a company has stopped a current business and it is exploring new business avenues, and the financial statement have been prepared on going concern basis. Now what is to be done in this respect? Another example could be that there are no operating activities since last 2 to 3 years. whether the going concern would be appropriate for the preparation of the financial statements. This is a debatable issue, but to my mind, I would say that okay, when the company has ceased its operations for last 2 to 3 years, or when the company is exploring new avenues, and the existing business has been completely stopped, then appropriate disclosure has to be mentioned, and auditor needs to give a separate para as to a material uncertainty related to going concern. Uh, Management might argue that a company would still be in existence, only the change in the business would occur. In that case, we need to see whether the concrete action plan has been initiated by the management, whether the object clause in the memorandum, if it is a company, has been changed, or whether there is any concrete development or visible progress uh, uh, towards this direction has occurred or not. If it is so, then of course, proper disclosure has to be mentioned, but material uncertainty would not be featured into. Written representations, SA 580. Friends, written representation is a key aspect also, but it is not a substitute of an audit evidence that the auditor is supposed to gather. This written representation can only supplement the audit evidence which the auditor has already gathered. So it should not be treated as an audit evidence per se, uh, uh, which the auditor is supposed to obtain. Uh, and further, one more thing, that normally management representation letter should not be cluttered with too many things. It should be restricted to the very critical areas which the auditor needs comfort from the management. 600 series talks about the using the work of another auditor, using the work of internal auditor, and 620 using the work of an auditor expert. uh, Using the work of another auditor, it applies more to a consolidated financial statement, or if the entity has several branch offices and the branch auditor is different from the auditor of the main unit, then SS 600 needs to be applied. And before deriving any conclusion or simply relying on the work of another auditor, uh, what the auditor should consider, that what sort of controls are prevailing with the another auditor per se. If he wants to, if the principal auditor wants to use the work of another auditor, he has to assess the veracity, effectiveness, and authenticity of the internal controls and the quality controls that another auditor possesses. After considering all these parameters, the principal auditor is also expected to take into consideration the significant findings of the other auditors and see how it would impact the overall the financial statement of the company as a whole. SA 610, using the work of internal auditor. Again, internal one important thing that the auditor needs to ask or request the management, that the scope and coverage of the internal auditor needs to be determined in consultation with the statutory auditors. So the auditor, statutory auditor in this case, would derive a lot of comfort from the work of internal auditor. It can very well use the work of internal auditor. Of course, internal auditors' objectivity and competence should also be assessed. And if the statutory auditor is not comfortable with the competence of the internal auditor, he should communicate with the reasoned findings, that why he thinks, he believes that the particular internal auditor or internal audit function, internal audit team is not competent enough, and replacement should be requested. And again, friends, whenever the report of internal auditor is produced to the statutory auditor, as a statutory auditor, we should uh, go through the internal audit report threadbare and see how it might have a bearing on his own audit report. 700 series talks about the audit conclusions and reporting. SA 700 speaks about the forming an opinion and reporting on financial statement. 701 communicating key audit matters. Of course, this is mandatory for the key audit for the listed companies, but it is discretionary for the private companies and smaller companies as well. So it is not so that only listed companies need to give key audit matters. Suppose a smaller private company has a parent, overseas parent, which requires the component auditor to uh, uh, incorporate key audit matters in its report to be produced to the parent company's auditor, then component auditor needs to mention the key audit matters as well. 705 talks about the modification, EOM, 706, 710, and 720. As we are aware of the standard SA 700, this is the chronological order in which our report should be prepared. Title, address, auditor's opinion. What is most critical here is the basis for opinion. And this assumes even more importance when the opinion is modified. So the basis for opinion has to be very explicit and unambiguous in the language. If going concern uncertainty is relevant, then going concern para has to be there, EOM has to be there. Uh, if there are certain factors which auditor thinks this is a matter of relevance, then EOM has to be drawn. Key audit matters in the case of listed company. So, friends, there may be a situation when a particular item can fall in the either category, emphasis of matter category as well, and key audit matter category as well. So let me tell you, friends, EOM is or key audit matter is not a substitute for the emphasis of matter. If particular item has to be reported, uh, then instead of key audit matter, it should be reported in the emphasis of matter, because emphasis of matter assumes more prominence than the key audit matters per se. Then, of course, auditors and management responsibility, UDIN is the needs to be mentioned. Modification to the opinion in the independent auditor's report. So modification could be of three types. Either there can be a qualification, there can be adverse opinion, and there can be a disclaimer of opinion as well. So in which situation a qualified opinion would apply, and in which situations adverse or disclaimer of opinion would apply. So if the financial statements are materially misstated, but that misstatement is not pervasive to the entire financial statement, a qualified opinion would suffice. But if it is material and it is pervasive also, then an adverse opinion needs to be taken into account. For example, a certain provision for expenses has to be made in the financial statement, and those provisions, which are of course material, are not made by the management. So this is a subject matter of a qualification and not an adverse opinion. But let's take an example when the sales figures and purchase figure both are materially misstated in the financial statements. So it would have a pervading effect on the entire financial statement as a whole, in a sense that it would not only impact the sales figures, purchase figure, profits, results. It would also have an impact on the outstanding balances of the creditors, debtors, and inventory as well. So we can very well conclude that these particular item or this particular misstatement has a pervasive effect on the financial statements, and the adverse opinion should be given in that situation. And if the auditor is unable to obtain sufficient appropriate audit evidence, then a qualified opinion can also happen. And if, as I said, if it is a pervasive in nature, then disclaimer opinion would be would need to be given. This is the suggested para that needs to be included when qualified adverse or disclaimer of opinion has been given. Uh, Qualified opinion starts with a para, in our opinion, to the best of information explanations given to us, except for the effects or possible effects of the matter. Now, when do we use the effects and when do we use the possible effects? So, I have, friends, I have come to a few of the audit report when their auditor has given a qualified opinion. That qualification has been quantified in the opinion. Say for deferred tax liability has not been provided, there is a quantification that so and so much amount has not been provided, and that's why DTA, deferred tax liability, is understated, and reserves or profits has been overstated by this much amount. So the effect is known, determinable, ascertainable, and quantified. And even though it is quantified in the report, the auditor has used the word except for the possible effects of the matter described in the basis for qualified. This is not a subject matter, or this there is no question of possible effects here, because effect is known. The auditor should have used the word except for the effects, not the possible effects. When the possible effects, the wordings can be used that the auditor is unable to determine the quantity involved in the material misstatement. Say, for example, the actual gratuity liability has not been provided on the basis of actuarial valuation. The auditor is not technically competent enough to determine what could be the quantity that would be arrived by the actuary. So, in that case, a possible effect wording can be used. But when the quantification is there, only effect word should be used. In the adverse opinion and disclaimer opinion, as I said earlier, the basis of opinion assumes a greater significance. A basis of opinion should describe the factors why the auditor has been led to give or issue a adverse or disclaimer of opinion. Emphasis of matter para and other matter paragraph in the independent audit report. So, friends, there is some misconception that is there prevailing between the emphasis of matter para and other matter para. So, when the emphasis of matter para should be incorporated in the financial statement, when the particular assertion or particular disclosure has been appropriately made in the financial statement, and the reference to that note needs to be given in the audit report, then the auditor needs to use the emphasis of matter para. And when the particular disclosure is not given or it is not required per se, but it is so critical in understanding the financial statements, then in that case, auditor needs to incorporate other matter paragraph, and the entire matter needs to be mentioned in under that para. Auditor's responsibilities relating to the other information, SA 720. This is a relatively new essay which has been in force since last 2 years. This talks about the analysis by the auditor about the other information which is other than the financial statement and audit report. It could be in any form. It could be in the form of board report, management discussion, other shareholder information. The auditor is supposed to go through the board report and other information and see whether there are inconsistencies between the financials, what has been described in the financial statement and what has been there incorporated in the board report or other information. And if there is an inconsistency, then the auditor needs to communicate those inconsistencies or bring to the notice of the those charged with the governance and management and ask them to remediate those inconsistencies. And if the management refuses to remediate the anomalies or inconsistencies, then the auditor is required to take appropriate actions necessitated by facts and circumstances. It might consider communicating to the management to stop the circulation of the auditor's report. It can also intimate to the regulatory authorities that these inconsistencies are there. But many a times we have encountered that this information is made available after the date of our audit report. So we should clearly bring out that fact that this information is expected to be made available after the date of audit report in our audit report itself. But that does not absolve us from going through the other information which is available after the audit report. Whenever that information is made available, we should invariably go through those information and see whether there is any departure or anomalies are there between the financial statement and other information. 800 series talks about the specialized areas audit of financial statement prepared for special purpose frameworks. 805 deals with the audit of the specific elements. 810 deals with the summary of financial statement. Let's talk about SA 800 here. Uh, uh, Auditor is sometimes required to prepare the to issue a report on the special purpose framework. Say, for example, the parent overseas parent asks the auditor to prepare subsidiaries account under IFRS. So this is a special purpose framework which needs to be adopted by an auditor to report upon. But whenever auditor uh, gives his report under a special purpose framework, the title of the audit report should be very crystal and clear. That this is a special purpose audit report. And in audit report, a framework has to be mentioned, that what is the framework that has been applied on the financial statement and under which framework the auditor issues his report. And of course, a restriction on use para has to be mentioned, that this audit report has been prepared under so and so framework, and therefore it is not suitable for the other purposes as well. Coming to 2000 series, this talks about the standards on review engagements. It consists of two standard, 2400 and 2410. So, in which circumstances do we apply 2400 and which circumstances do we apply 2410? 2400, when a practitioner who is not an auditor of an entity but independent of an entity has been engaged to perform a review on the historical financial statement, then that practitioner need to apply SRE 2400. Uh, and the review report should categorically mention that this is the review and only a conclusion has been issued based on the review. The conclusion or the review gives a limited assurance, in a sense that it doesn't offer any opinion as such, but it states that nothing or anything has come to the attention of the practitioner to believe whether the particular financial result or financial information has been prepared or has not been prepared in accordance with the accepted accounting practices and other applicable accounting standards or Ind AS per se. 2410 applies to uh, uh, an auditor who is also a statutory auditor of an entity. So he is independent and he is also a statutory auditor. And that statutory auditor has been engaged to perform a review on the financial information. In that case, SRE 2410 has to be applied. Coming to the assurance engagements other than audits or review of the historical financial information, 3000 series would apply. SAE 3400 is there, which is examination of the prospective financial information. 3402 assurance report on controls at a service organization. Uh, uh, 3400 it essentially talks about how to report on the examination of the prospective financial information. Sometimes auditee entity comes up with a request that you perform your examination on the prospective financial information, which is of course futuristic in nature. So in that case, the auditor needs to adopt SAE 3400 and report accordingly. So basically, SAE 3400 is a blend of a review as well as opinion. Review in a sense that auditor needs to report that nothing has come to their attention, that the particular prospective financial information has not been prepared on a reasonable basis. And in the opinion para, they need to auditor practitioner need to report that in our opinion, we believe or we opine that the particular prospective financial information has been prepared on the reasonable and supportable basis. So it is basically a blend of both a review as well as opinion. SAE 3402 assurance report on controls at a service organization. This essentially deals with a situation where an entity has outsourced certain functions to the external party. So, and those functions are so critical in the context of the overall financial statement that the auditor needs to apply SAE 3402 as well. A practitioner need to apply 3402 as well as to what sort of controls are there at other service organizations. Say for BPO, the practitioner need to ensure the existence of proper and adequate control at the service organization also. Related services and 4000 series is engagement to perform agreed upon procedures regarding financial information. One example that comes to my mind is a assignment to conduct a forensic audit. This is audit which requires a practitioner to perform the agreed upon procedures. So SRS 4400 assumes a greater significance here, and in this case, engagement terms is very critical, and it has to be very uh, well thought out before putting into a piece of paper into writing. One essay which I like to, rather two essays which I would like to highlight here, or I couldn't put up the slides due to the dearth of the time. One is essay 250, which talks about the consideration of other laws and regulations. Many a times, what happens, there are plethora of laws that are prevalent in the Indian parlance. Now, say for example, a chemical industry. Now, pollution laws would apply, and you come across that there is a pilferage or there is a slippage of hazardous chemical, and it goes into adjacent farm. What do we do in that respect? We know that there is a non-compliance of the law per se. So in that case, what I would recommend, of course, this is my personal view, is that we should bring this fact to the notice of the management, that this we have observed, and we should ask from them what remedial measures that have been taken in order to plug these non-compliance. And if the management does not give a proper explanation to that thing, then auditor needs to consider what could be the probable impact on the financial statement as well. So this is the thing that should be kept in mind. And further to that, uh, a basic understanding of the laws that are applicable to an entity is of utmost importance. For example, if the entity is the export oriented entity, majority of the imports are also coming from the overseas, then the basic understanding of the FAMA and RBI norms is a need, is of utmost significance, and auditor needs to be wary of that thing. A auditor may be pulled up for not reporting the very palpable non-compliance that should be visible for, an auditor should be reporting on that non-compliance. Another standard on auditing which I would like to highlight in the context of the Companies Act is SA 550, which is a related party transactions. So, friends, when we go through Section 188 of the Companies Act, it states that nothing in the subsection 1 would apply if the transaction with the related party has been carried out in the normal course of business and at arm length basis. Now, what are the auditor's responsibilities? Because SA is also there, talks about the related party transaction. Now, what are the auditor's responsibility on this thing? So, if we juxtapose the provision of the Section 188 along with the essay, we should see whether the particular transaction has been carried out at arm length or not. And for that, we need to ask the management to furnish what sort of exercise, what sort of procedures that they have carried out to determine that this particular transaction has been carried out, in fact, has been carried out at arm length. Friends, we should keep in mind that even if the board has determined that this particular transaction has been carried out at arm length, we should still be asking for the procedures that they have carried out in order to determine so. Because we do not have a responsibility towards the board of directors. We have a responsibility towards the shareholders and other stakeholders. So this thing wanted to bring to your notice. So this is it from my side. Thank you very much. If any further questions are there, I would request the committee members to flash those questions on the screen. So I'll be happy to answer them. Thank you.
Members may ask their queries.
Can I add something with respect to the standards on audit? Jarvis bhai,
Yes,
with your permission.
Sure, sir. Anytime, sir. Please.
Yeah, as you are aware, standards on audit is something which is very close to my heart. And especially, when we talk of small and medium practitioners, an excellent presentation by Shripal. So first of all, let me compliment that. I would just like to highlight some of the aspects which Shripal has already covered, and that is keeping the, that I am speaking to members at the Navsari branch, which are principally or primarily the small and medium practitioners, and not into large corporate audits. So, many times the questions that during my interaction with members per se, especially the SMPs, that, Vishal bhai, we don't have so much of time, so much of compliances to be done, last minute compliances, the clients, they don't understand who's going to pay us for all these additional efforts that we put. Yeah, these are just very simple, or I would say straight from the heart questions that members feel comfortable in interacting with me. I would just like to say that, standards on audit is a requirement that is on the auditors, very rightly put by Shripal in the opening remarks. Friends, I would just suggest that, when please spend 5 minutes in going through the audit report that you are signing as an auditor, be it of a partnership firm, be it with respect to a private limited company or a listed company. When you're signing the audit report, there you are taking up a lot of responsibilities because you are signing and then you are saying that you have complied with the standards on audit. That is a paragraph with respect to the auditor's responsibility where you are giving such an assertion that you have complied or you have conducted your audit as per the auditing standards issued by the ICI and that you have complied with it and all those things. Normally, when we go for an audit, whenever client, in their books of account, they have some entry, some contract, some purchase voucher, where they have signed off some agreement, and we, as a matter of right, as an auditor, we ask them a lot of questions. That in this contract, this is mentioned. Please show me. You have shown that this is the inventory, so please show me the backup papers for that. Fixed assets purchase, please show me the backup papers with respect to that, and we ask for all that. Let us say I come to your office and I say that in your audit report, you have mentioned that you have complied with the standards on audit. Please give me the backup papers. Then what would you provide me with? So this is the first question I would request members to kindly ask yourself, that as an auditor, you go and ask for so many things before you sign off. Similarly, when you become an auditee, and let us say I hypothetically come as an auditor and do a peer review or any such thing, even a regulator, even an income tax officer can come and ask that you have given in your tax audit report that you have examined all these things, please show me the backup papers, because you have said that you have done as per the standards on audit. So that is one thing that we all need to factor in. Second thing is some very basic elementary documents. So, the question comes, where do we start from when we come to standards on audit? अरे विशाल भाई, इतने सारे standards है, उसको कौन पढ़ेगा, कैसे implement करेंगे, क्या है? So I would suggest to all my friends over here, start with something which is very bare minimum and make it a part of your process in your office, right? See, we have all put a process when it comes to a GST return compliance. We have a process set in our office that client would send these files and we have our Excel tool or whatever and we match and everything and then it gets uploaded. Even for any income tax return, we have all the processes. So even for this, I would say, first of all, start with an engagement letter. Very rightly put by Shripal that this is the first document. It is like a contract. See, we don't enter into a contract when we do an audit with a client. When in a commercial world, there are always purchase orders, always contracts which are signed between the vendor and the supplier or the service provider and the user. But over here, as an auditor, auditee, we don't have any contract. So the first thing is to get the engagement letter in place where we talk about the management responsibility. What are they supposed to do? They have to give us access to all their books, records, everything, blah, blah, blah. And then we also say what is our responsibility. So that is the contract. Questions, अरे विशाल भाई अभी इतने ऑडिट्स करते हैं, हर साल कौन एंगेजमेंट लेटर नया बनाएगा, कितना टाइम जाता है, I appreciate. So if you recall, Shripal had in one slide mentioned that once an engagement letter is signed, it is not required to be executed, or I would say re-executed in case of recurring audits every year. Unless there is a change, like there is a change in management, there is a change in scope, there is a change in the law and regulation, only in such circumstances that you are required to execute a fresh engagement letter. So what I would suggest is, definitely first time you will have to put in efforts, which we have to do for any case, right? So first time, I believe this, now that the compliances and everything is over, you would definitely, your office would have time, start preparing the engagement letters for all your audit clients, get them signed by the client, you sign it, have it 2 copies, let one be with the client, one be with you, put it in your file. And next year, unless there is a change as envisaged by the standard, you will not be able to re-execute that engagement letter. So that is the first and foremost thing. I would also suggest, please don't mention the fees. Quantify the fees in the engagement letter. This is my personal suggestion, because subsequently, wherever there is a revision of fees, you will have to again go for a fresh engagement letter. So you can say that the fees would be as per mutually decided between the client and the firm. So that becomes a standard norm. एग्जीक्यूट 100, 150, 200 जितना भी होता है, एक बार टीम को काम पे लगा दो, क्लाइंट लिस्ट आपके पास ऑलरेडी है, स्टैंडर्ड फॉर्मेट है, किसी को ऑफिस में बिठा दो, डिस्ट्रीब्यूट द वर्क ऑल्सो. आई वुड गो स्टेप हेड दैट इफ यू हैव 2-3 पीपल, एक को बोलो प्रोप्राइटरशिप का एंगेजमेंट लेटर बना दे, टैक्स ऑडिट रिलेटेड, पार्टनरशिप का बना दे, और किसी को कंपनी का, बिकॉज देयर वुड बी डिफरेंट रिक्वायरमेंट्स इन कंपनीज, अलग अलग बना के क्लाइंट को भेज के साइन कर दीजिए. सो दैट इज द फर्स्ट बेसिक डॉक्यूमेंट रिक्वायरमेंट वी मस्ट हैव. Second, Shripal also very lightly mentioned and covered with respect to the materiality. See, materiality, where I say it comes helpful. See, हम लोग के offices में, especially when it comes to the small clients and small practitioners, what happen? हम लोग वो जब client आता है बोलते हैं, see, I am speaking in Hindi. I know I am interacting with Navsari branch, but I am speaking in Hindi because Jarvis bhai said that we have a lot of people from outside Navsari also who have logged in. So, you know, for the benefit of everybody, I am speaking in our national language. So materiality, see what happens is जब क्लाइंट आते हैं कि भाई विशाल भाई ऑडिट के लिए बुक्स रेडी है, तो हम लोग क्या करते हैं, ऑफिस में एक दो बंदे होते हैं, उसको बोलते हैं जाके तुम कैश वाउचिंग, बैंक वाउचिंग सब चालू कर दो, परचेज वाउचिंग एंड ऑल, विदाउट गिविंग देम प्रॉपर डायरेक्शन. नाउ व्हाट हैपेंस, वेयर श्रीपाल मेंशन मटीरियलिटी, नाउ वो कैश वाउचिंग करते हैं तो वो 200-500 रुपए के भी वाउचर करते हैं, वेयर द टर्नओवर लेट अस से इज अबाउट 5 crores or 10 crores in that particular client. I'm talking of typically a tax audit client. Now whether that 200-500 रुपए का वाउचर are required to be done, लेट अस से वो 500 रुपया पूरा का पूरा गलत भी हो गया, then whether as an auditor I would be held responsible, considering that I'm saying that it is free from material misstatements in my audit report. So what I would suggest is that we have a materiality matrix, a tool which we have put up on the WRC website. I would request kindly download that. You can have your materiality limit. So let us say in that client, the materiality threshold comes to 5,000 rupees. I'm just saying hypothetically. तो आपके टीम जो भी वाउचिंग के लिए जाते हैं उनको बोलने का भाई वाउचिंग करना है इतना परसेंटेज, बट इग्नोर ऑल दैट इज लेस देन 5,000. डोंट पिक दैट अप एज पार्ट ऑफ योर सैंपल. So what would happen is that वो लोग जब जाते हैं, वो लोग जो स्टैंडर्ड वाउचिंग करते हैं उसके बेसिस पे the number of days they might be spending is 3 days or 4 days. But when you go into materiality and looking into the transactions, that vouching might be restricted to 1 or 2 days. Now on the balance, एक दो दिन जो बचते हैं, they can do much more qualitative work with respect to ledger scrutiny or with respect to finding out that whether taxes and all have been paid in time or not, या tax audit के annexures बनाना, जो भी है. But you can improve the quality by keeping the materiality threshold in mind, because that is applicable to all of us. It is under the standards on audit which we are supposed to follow. So you can tell your team कि भाई वो सब छोटे छोटे को छोड़ दो. See, वो लोग क्या करते हैं, वो 500 रुपए का बोलते हैं ये स्टाफ वेलफेयर में नहीं जाएगा, ये उधर में जाएगा, और वो क्वेरी निकालते हैं, and then they solve queries और उसका rectification होता है. And then if you look at the whole end-to-end thing, there is a lot of time that gets actually spent on something which I would say is immaterial from a typically audit perspective. So that is another thing which I feel the small and medium practitioners must start implementing from tomorrow itself, right? So that was with respect to materiality. Third important, so first was engagement letter, second was materiality. The third important aspect which I would come to is the closing file. अभी क्या हुआ है, 15 जनवरी सब ने रात को 1-1, 2-2, 3-3 बजे तक या घर भी नहीं गए होंगे, आई नो दैट, और सब कंप्लीट कर दिया है. एंड देन वी हैव नॉट डन एनी हाउसकीपिंग आफ्टर दैट बिकॉज वी वर सो टायर्ड, सो एग्जॉस्टेड that we have honestly not done. I can see the stress on Jarvis by face right now also when I'm speaking such things. So what I'm trying to say is that we don't do housekeeping. I don't know, I might have said this when I came to Navsari branch recently, but I'm still saying for the benefit of all members, one thing which I would say as a closing file becomes very, very important is to have the final backup and a closing trial balance signed by the client and by the auditor or somebody from our team. See what happens. Although I'm going to speak on the code of ethics, which would not permit me to say do such things, but normally क्या होता है, provision for taxation की entry हमारे ऑफिस से फाइनल होती है, remuneration to partners हमारे ऑफिस से फाइनल होता है, depreciation का वर्किंग हमारे ऑफिस से फाइनल होता है. Let us all be very candid, we are all professional brothers and sisters. और वो लास्ट मिनट होता है, बोलते फटाफट अरे ये ओके हो गया, साइन करो, प्रिंट करो, यूडिल लगाओ, फाइल करो, अपलोड करो, बराबर है. And then we go to the next client, और 15 को राधा को 12 बज गए, घर जाके सो गए, राइट. 16 को विशाल भाई आए थे नवसारी में, फेलिसिटेशन हो गया, and then we are all relaxed. But what happened, हमारे ऑफिस में अगर आप आज जाके देखेंगे, So there would be 2 to 3 or maybe more than that tally backups for the same client, 3 or 4 trial balance, और उसमें से एक भी I can assure you final वाला तो होगा ही नहीं. And see, that is not the problem. The problem that happens is, especially with the small medium practitioners, is next year. Next year जब आपकी टीम ऑडिट पे जाएगी तो बोलेगे सर ओपनिंग बैलेंस मैच नहीं हो रहा है, और वो उसमें तब 2 दिन इन्वेस्ट करेंगे. 2 दिन हम लोग बोलेंगे भाई वो डेबिट क्रेडिट तो अल्टीमेटली मैच होना चाहिए, तो तेरा ये मैच नहीं हो रहा है, तो देख रहे सामने क्रेडिट साइड में कहाँ पे मिसमैच आ रहा है. एंड देन यू प्लीज फाइंड आउट, एंड देयर वुड बी 10, 15, 20 लेजर्स जहाँ पे मिसमैचेस है. एंड देन यू स्टार्ट थिंकिंग अरे यार ये लास्ट ईयर क्या एंट्री किया होगा. You will assume certain entries, or you will actually recollect. You will go to last year's file, आपके सर्वर में जाएंगे, you will extract, pull out some of the data. Again, you will find कि कोई भी final आपके पास available ही नहीं है. And then somehow you will match. So you can imagine 2 days, maybe more also, maybe less. But I am saying as a benchmark, my experience interacting with members, कि वो 2 दिन तो जाते ही है opening balance को match करने में. So what if we prepone that, और आज अगर हम लोग ये डिसाइड कर ले कि मेरे को क्लोजिंग एक्टिविटी विच इज ऑल्सो रिक्वायरमेंट, लेट अस से मैं स्टैंडर्ड्स ऑन ऑडिट का कंप्लायंस ही कर रहा हूँ और मेरे को कंप्लायंस नहीं करना है, बट मैं अपने नेक्स्ट ईयर के 2 दिन बचाना चाहता हूँ, उसके लिए मैं ये कर रहा हूँ. गो टू योर ऑफिस टुमारो, टेल योर, हम लोग जैसे दिवाली की साफ सफाई करते हैं, प्लीज सी दैट ऑल योर ऑडिट फाइल्स आर क्लीन्ड अप, ऑल इररेलेवेंट पेपर, डुप्लीकेट पेपर्स आर स्क्रैप्ड, right? You can have those shredder machines in your office and start putting everything and shred all those things which are not required. Take a fresh printout of final versions which are there, sign it off. आज आपको याद है आपने क्या क्या एंट्रीज करवाई है, क्या क्या प्रोविजनिंग रिलेटेड है, ट्रायल बैलेंस और बैलेंस शीट कैसे मैच करना है. इट विल नॉट टेक यू मोर देन 2 hours. लेट मी अश्योर यू विथ योर ऑडिट टीम टुडे to have that final trial balance, to have all those entries parked in the trial balance or in the software tally है या जो भी है client के वहां पे भेज के entry डलवा दीजिए. Take a printout of that, sign off and put it on record. These 2 hours, I assure you, would save 2 days of the next year. और बहुत बार हमारे ऑफिस में क्या होता है कि नेक्स्ट ईयर की ऑडिट टीम भी चेंज हो जाती है, तो वो कंटिन्यूटी में फिर see unfortunate part is कि हमारा टाइम फिर जाता है, which is more worrying for me that as a professional, if I see, I get pained when I see my fellow chartered accountants के वो opening balance match करने में 2-3 घंटे invest कर रहे हैं, which they can otherwise definitely utilize in much more productive way. So third thing is about what Shripal mentioned, and I fully endorse, is closing your audit files. Please mark my words and take as a I would say a brotherly advice, and मेक इट अ पार्ट से. ये आपका सिस्टम हो जाना चाहिए कि एवरी ईयर भी आपको चलो 2-3-4 दिन आपने रिलैक्स कर दिया, बट कीप 1 week. आई वुड सजेस्ट लेट अस से नेक्स्ट वीक, ऐसा भी बजट आ रहा है तो वी से दैट नेक्स्ट वीक लेट अस नॉट डू एनीथिंग बट कीप पुट ऑल आवर ऑडिट फाइल्स, नेक्स्ट सैटरडे तक सब कंप्लीट करके क्लोज करके हम लोग रख देते हैं. So that was the third thing. And the fourth is about the management representation letter, which is the closing document. Like we said, the opening document becomes our engagement letter, right? And then the closing document is the MRL. MRL is something again where a lot of responsibilities is with the management, where they certify that these things they are assuring. Let us say contingent liabilities. हमने या तो नील दिखा दिया या हमारे ध्यान में जो contingent liability है वो हमने disclose कर दी, because GST का compliance में भी हम कर रहे हैं, company law का हम कर रहे हैं, income tax का हम कर रहे हैं, तो हमको पता है. But are we sure that there are no other contingent liabilities other than that which we are aware? We don't interact with clients, especially at the small and medium enterprises, but there might be some other demands which we are not aware of, which we must disclose. So in the MRL, actually you take that the management represents that there are no other contingent liabilities which other than those which have already been disclosed in the financial statement. So that the management is signing and that you are keeping on record as part of your audit procedure कि भाई हमने पूछा भी था मैनेजमेंट ने और मैनेजमेंट ने ये रिप्रेजेंट भी किया है कि ये छोड़ के कोई और कंटीजेंट लायबिलिटी नहीं है. So that at some point in time might help you when such things happen or go the wrong way. So I thought that, you know, before anybody asks any questions or even if in case there are no questions, I just wanted to share that as far as small and medium practitioners are concerned, these are some of the very, very elementary things with respect to the standards on audit and documentation, which we must have. And let us all take this. I would not put on oath or something like that, but let us all reflect back and say that let us start a few things. And in case any one of you wants any documentation as format with respect to engagement letter or with a management representation letter, they can contact Shripal or me, and we would be more than happy to share those draft templates with you, which you can start using in your office from tomorrow onwards. So that was from my side. Dharvish bhai, thank you for giving me this opportunity for sharing the views on standards on audit. Back to you, sir.
Amit,
Thank you, sir. Sripal sir, thank you very much. Vishal sir, also thank you very much, sir. I request Sohail Memon to introduce Vishal by Doshi.
Good morning, everyone. I'm very happy to introduce CA Vishal Doshi, sir. I would like to add he is a very good friend of our Navsari branch. And I'm saying this because he's always just a message away. Whenever you have any queries regarding students or members, he's just a message away. Even in branch related activities, he's very helpful to us. That's why he's a very dear friend of our Navsari branch. And I'd like to introduce, it's my pleasure to introduce Vishal Doshi, sir. He's a Western India Regional Council member for the year 2019-22, and he's also vice chairman for the current year 2020-21. He's a qualified chartered accountant since year 1996. He was a partner in MS Praveen Doshi and Company Chartered Accountants in Vadodara from 1997 till 2005. He's currently a partner in KC Mehta and Company since 2005. He has a specialization in statutory audits, tax audits, internal control, budgeting control, information system control and audit, due diligence, share exchange ratios. The list is very long to introduce Vishal Doshi, sir. He has given various presentations on Ind AS, IFRS. He has been a faculty at several seminars of branch of WRC, lecture meetings, study circle meetings on various topics such as accounting standards, auditing and assurance standards, Company Act, CARO, enterprise risk management, and host of technical and non-technical subjects. He was also visiting faculty to postgraduate course at MS University, Baroda. He has been associated with ICI since very long term. He was a peer reviewer for Peer Review Board ICI, technical evaluator of financial statements for ICI Awards for Excellence in Financial Reporting for Research Committee. He was the chairman, Baroda branch of WIRC of ICI in 2005, also a Vikasa chairman in the year 2004. He has been a committee member for Baroda branch of WIRC of ICI of India from the year 2000 to 2002 and secretary in 2003. Apart from this, his other credits related to his life are he was awarded Rashtrapati Scout Award by Sri K.R. Narayan, Honorable President of India. He was also appointed expert member on the Board of Studies in Accounting and Financial Management, Faculty of Commerce for the term 2020-23 by MS University, Baroda. He has been the part of various committees in the year 2019-20 for WIRC. I would like to mention few. Ind AS Vice Chairman, Valuation Vice Chairman, Professional Development Member, GMCS Coordination Member, Public Relations Member, Direct Taxes, Internal Audit, Capacity Building of Members in Practice. In current year, Branch Coordination Chairman, Digital Accounting Assurance Board Member, Ethical Standards Board Member, Exposure Draft, Internal Audit, Cooperative Society, CP Executive. As I said, the list is very long. Committee of Members in Practice, Committee of Economic, Commercial Laws and Economic Advisory. So hereby I welcome Vishal sir to carry on the proceedings, and we heartily welcome you, sir.
Thank you, Suhail. And the heartening part is that I can understand that you are in a vehicle and on highway or on road, and still you are connecting. I think that is the passion that I've seen with the committee members of Navsari branch, which is very nice and heartening to know. I'll just share my screen, friends. Yeah, so I would thank Navsari branch for giving me this opportunity of sharing my thoughts on a very different topic with respect to the Code of Ethics 2019. Like I said, normally, I make presentation on the accounting standards, Ind AS, and standards on audit. And Code of Ethics is something which is again very close to my Art. So I'll come straight to the topic. Friends, we must have all, we are, I think, now by now all aware that we have this revised code of ethics, which has been made applicable to the members of ICI from the 1st of July 2020. So I'll just give some background that why this change. Uh, our institute, the ICI, it is a member of the International Federation of Accountants, the IFAC, that is the international body of all the accounting bodies worldwide. And under IFAC, there is a board on the typically to recommend the ethical standards to all the member bodies of the IFAC. And India also being a member body of IFAC, the international ethical standards, the ISBA standards are applicable to it. So we had the earlier code, which was almost 10 years old of the 2009. And at that point in time, also that was based on the IFAC or the ISBA code of ethics of the 2005. Thereafter, the ISBA code of ethics, they regularly every 2 years, they carry out modifications to their existing code, and there were modifications in the year 2011, 13, 15, and so on. And we had not changed since 2009, and therefore the need of change, and we all know that things are also changing at the ground level for members. And therefore, we are now having this ICI Code of Ethics 2019, which is a revision of the 2009, but it is a much more, because there was no changes in the last 10 years. It has much more elaborated and updated provisions with respect to the Code of Ethics. Typically, we have done our convergence with the ISBA Code of Ethics. So what we mean by convergence is that, we take the relevant provisions of the ISBA Code of Ethics, but they are with modification. So it is not an adoption where we do a full copy and paste and implement it, but it is a convergence where we take provisions from there and modify it to suit to the Indian environment as well as the Indian laws and regulations. So similarly, the our code of ethics presently are converged with the ISBA code of ethics, and they are approved by the Central Council of our institute. As far as compliance with the code of ethics is concerned, the code of ethics are issued by way of guidelines of our Central Council, our council of the ICI. There is a under the CA Act, the second schedule, we have that where it is mentioned that a member of the institute, whether in practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any of the provisions of this act or the regulations made thereunder, or any guidelines issued by the council. So that is how the mandatory requirement of the code of ethics comes into play. And since the code of ethics are issued as a guidelines of the council, they are mandatory and would violate the provisions of the act or the regulations and would be subjected to disciplinary mechanism. So now what about the three new codes? Three new volumes are there under the Code of Ethics 2019. Earlier, we had just one volume where it was Part A and Part B. The Part A was with respect to the provisions that were converged with the ISBA Code of Ethics, and the Part B of the first volume was with respect to the provisions under the CA Act and regulations and as per the Indian laws. So now that volume 1, Part A, Part B has been split into two volumes, that is volume 1 and volume 2. So volume 1 is a counterpart of Part A of volume 1 that we had earlier, which is based on the ISBA Code of Ethics. So it is more on the principle based. So even you would be aware that under accounting standards, we say that there are accounting standards which are principle based and which are rule based. I'll just broadly explain what can be the difference between the two. See, on a principle based, it is more of a generic in nature, where we say that where we follow certain guidelines and certain principles which are not very specific but are generic in nature. But when we say rule based, so that means it is in a particular situation or a particular transaction, that how that particular, what is the approach that has to be taken in a rule base. So if I want to give an example, so when I talk of, let us say, I'll give an example, I'll pick an example from an accounting standard. So what the accounting standard says that, in case of, I'll say, fixed assets, that fixed assets which have a which has a useful life which is beyond 1 year, they should be capitalized. So this is a general principle based rule or principle based approach. But when I talk of something very specific, that mobile phones have to be expensed off, so then there is a very specific thing with respect to a mobile phone, with respect to a particular item of a property, plant, equipment, and then therefore it becomes a rule-based approach which applies to all the mobiles. So this is the difference. So when I talk of volume 1 and volume 2, there also volume 1, because it is based on the ISBA code of the code of ethics, it is principle based and on the conceptual framework based on general principles. Whereas volume 2, since it is based on the legal framework as per the CA Act, CA regulations, let us say Companies Act, RBI Act, all the laws that are in force in India, it is more rule based, and therefore it has an inbuilt mechanism for its enforcement. And the volume 3 is the, I would say, volume which contains the disciplinary case laws which have been decided so far by the council. And I would not say that all might be covered, but on a particular aspects of the code, wherever there has been a violation and the disciplinary judgments have come out, it has the updated relevant case laws. So this is how the content with respect to the different volumes should be considered. So if I take the volume 1, which we said is the principle based on the ISBA code of ethics. So there are different parts to it. The part 1 is applicable to professional accountants. That is everybody, be it a member in practice or in service. And it talks about complying with the code, the fundamental principles, and the conceptual framework. That is part 1. Part 2 is for the professional accountants in business or in service. So typically in our parlance, we can say that those who are not holding a full-time COP, the part 2, it would apply to them, but they are members of our institute. So the part 3 is for the professional accountants in public practice. The part 4 again is divided into 2 sections, that is 4A and 4B. These are the independent standards, and they are independent. One is with respect to the audits and reviews, that is part 4A. And second is the independence with respect to the other assurance engagements. So in fact, if you look at the volume of volume 1 as a book or as a soft copy, the part 4A and 4B are the major components of the whole volume 1, because it talks about the independence requirements for a member in practice with respect to assurance and other engagements also. And then we have a glossary. I would suggest that when you read the code of ethics, it is very important to go through the glossary. See, glossary, like, when we read our laws, be it GST, income tax, company law, is like a definition. So this per se is not like a definition, but it is a glossary which gives the meanings of the terms that are used in the code of ethics. And therefore, it becomes very important that when we read the code of ethics, we are reading it or interpreting it in the right context. And therefore, I would request members that when you read, please go through the glossary also. When we compare the old code with the new code, the 5, I would say, important substantive changes are: first is with respect to no-clar. Again, this this applicability of no-clar means non-compliance of laws and regulations. I will deal with it in a bit detail later on, but presently it has been deferred. This provisions of responding to no-clar has been deferred by the council, but there was no such provision earlier, and now this is a worldwide acceptance with respect to the response to the no-clar. Second is again restrictions on the taxation service to audit client. Again, very important, especially when we look at the Indian scenario, and again when we talk of the small and medium enterprises as well as the small and medium practitioners, that what are the types of services that we can provide, what we cannot provide. Earlier, there was no such prohibition on taxation services in the earlier code, but now there are some very specific provisions that have been brought into this code. The third difference or the substantive change is about the management responsibilities to the audit clients. Earlier, there was no provision under the 2009 code, but now there are specific provisions in this code. The fourth change against fees, where it is more than 15% of the fees of the firm, then there are certain requirements or safeguards that needs to be executed by the professional or CA member, I would say, PA, professional accountant. Uh, Earlier, it was recommendatory and 40% was the ceiling, but now it has been made mandatory. Ceiling is 15%. Again, I will deal with these things in detail, but this is the third provision of the Code of Ethics 2019 presently, which has been kept in abeyance, which has not been notified, because there are some discussions and deliberations which are still required, maybe at the council level, looking into the Indian situation and the scenario. And they might come out with some FAQs and guidelines about how these are to be implemented as and when they are notified. And the third is with respect to the duty of accountant in case of breach of the independent standards. So many times it might be happening that, through oversight, unintentionally, there might be a breach on the independence. And, in the earlier code, there was no mention about how to have a remedy for that. But now this code has such provisions about the safeguards and what should be the way forward for it. So these are some of the important substantive changes when we compare with the earlier code. Some structural changes, independence for assurance engagements. And now, so under the 2009 code, we had the independence, which was only for the assurance engagements. But in the revised code, we have the independence requirements for audit and review engagements and other assurance engagements. They have been differentiated. So like we said that if you recollect in the earlier slide, I had said that there is a section 4A and 4B, which talks of the assurance engagements and engagements also other than assurance engagements, how to carry out the independence check or independence requirements. The independence sections have been recharacterized as international independence standards. So this is another structural change that is there. Another thing very important is the use of the word shall in place of the word should. In the earlier code, the word should was used, which was more of persuasive in nature, recommendatory, I would say, or persuasive in nature. But when we use the word shall, it is more of authoritative and in the form of a mandatory requirement. And therefore, these provisions under the new code, we can say, are mandatory in nature and they must be complied with by all the chartered accountants. The pattern in which the sections have been given, again, there is a restructuring. I will have it in another slide, so I'll take it separately. And lack of clarity for each entity. So what happened in the earlier code, there was no distinction between different entities like firms, that what are the roles and responsibilities of firms, what are the roles and responsibilities on independence requirements with respect to network firms, and roles and responsibilities with respect to individuals within firms. So now under the new code, all these have been separately identified and there is a lot of clarity with respect to each type of the responsibility or role and responsibility and the compliances that is required by them. So like I mentioned earlier that the whole code was to be applied from 1st July 2020 as was decided by the council. But considering the COVID-19 situation, the council decided to hold back, or I would say defer, three provisions which are not immediately applicable. But I would recommend members that please do not sit back and say कि ठीक है ये applicable नहीं है, जब applicable होगा तब देख लेंगे. Friends, I would say that this is even earlier also the council had issued the draft code of ethics for public comments to members and all. And normally this is what has been the practice. I am not blaming anybody. I am just sharing my experience that even when we talk of any technical literature with respect to any government giving a public document or institute coming out with accounting standards, draft or auditing standards or any such thing which are put up for public comment, normally we as members, we do not put much stress on that. We ignore that, for maybe we don't have time or other commitments, whatever might be the reason. But the moment they are notified and they become applicable for us, and then there is when the members start reading and understanding that this would be difficult to follow, or this is something which is would cause hardship, and then we start making representations after it has been notified. So a very similar thing has happened with respect to these three provisions also, that once they were notified, that there was a lot of hue and cry with about how to implement this these sections, and therefore the council has put this on back burner for the present. They would notify in future. So that is where I'm saying that I would be taking this as part of the discussion today. So I would request members that though they have not been implemented presently, please understand and start gearing up that if these are to be notified at a later date, how would you be able to overcome that or comply with them. Professional accountant is the term used throughout the code, not chartered accountant, because like I said that these are the we have taken from the ISBA code of ethics, and different countries have used different terms as per the prevailing parlance in their respective countries, and therefore the general terminology used is the professional accountant, which has been defined in the code that a professional accountant is an individual who is a member of the Institute of Chartered Accountants of India. So as far as this code is concerned, the professional accountant would mean for us the chartered accountant being a member of the institute. And under the ISBA code of ethics, they have used the term professional accountants in business, but because we don't have any such categorization, we have modified that terminology to professional accountants in service in our code, which is in line with our CA Act 1949. So even in subsequent sites, there might be the terminology used as professional accountant or PA, which would mean a member of the ICI. Friends, these are the fundamental principles which we must all take care. I am not saying that we are not taking care, but this is just a refresher about the fundamental principles which have been documented, which form part of the code of ethics. There is a full section 110 on in volume 1, which mentions about the fundamental principles. So the first is about integrity, where a member is expected to be straightforward and honest in all professional and business relationships. Objectivity, where we should not compromise professional or business judgments because of bias, conflict of interest, or undue influence of others. Professional competence and due cares. I think this is something which is very, very important for us, because a lot of responsibilities that have been cast on us is because of our professional competence, and that is how we become members of our institute. And therefore it is our fundamental principle, I would say, and responsibility also, that we should provide competent professional service based on the current developments in practice, legislation, and techniques. Confidentiality, information, client information, that we have to respect the confidentiality of information as a result of our professional and business relationships. And over here, I would say it is not only for us as members, but for everybody in our office who is working on client assignments, that the principle of confidentiality has to be maintained and kept in mind, and due care has to be taken for that. And professional behavior, that we have to comply with the relevant laws and regulations and avoid any conflict or any conduct that the professional accountant knows or should know might discredit the profession. So we have to avoid such situations. So these are the fundamental principles of integrity, objectivity, professional competence and due care, confidentiality, and professional behavior, which we must follow and keep in mind. So what does the code of ethics would broadly say, or the framework or the approach would be that if there is a threat, like a self-interest threat or a self-advocacy threat or a self-review threat, then we have to apply safeguards. That how do we overcome that? And if we are able to reduce the threats by applying safeguards, then we can accept that assignment or we can continue with that assignment. But even after applying safeguards, if it is not possible to reduce threats, then we have no option but to decline that assignment. So this would not be only with respect to audit assurance assignment, but any assignment that we are taking up as a professional accountant. So as and when we go forward, we will come with this approach about how we can apply safeguards under various mechanisms. Friends, if you recollect, I had earlier mentioned that there is a change in the pattern of the layout with respect to each section in the Code of Ethics, which was not there in the 2009 code. It is there in the 2019 code, where first is that it is the section would have the introduction, where it sets out the subject matter addressed and introduces the requirement and application material of the framework. So that would be the first portion. Then the requirement. This would be designated by the letter R. So when you read the code, it would be like, let us say, section 110.1. maybe R1, something like that. So where R is the requirement, and it would include the word shall. So I have already said shall is something which is mandatory, and it imposes an obligation on the professional accountants to comply with. So that is the requirement about what we have to do, how we can do, and that is the requirement, and it is mandatory and binding for us. And the third portion is the application material. So it provides context, it provides illustrations, some matters to consider, suggestions for actions, and therefore it is a application material, a suggestive portion, where, you know, I'm just giving an example that, you know, if it says that there are certain safeguards to be applied, then the application material might give a couple of illustrations about how the safeguards or what type of safeguards can be applied by the professional accountant to overcome that conflict, if there is any conflict or non-compliance. So that is what is the application material, and it is designated by the letter A within the Code of Ethics Volume 1. So NOCLAR, I said that the applicability has been deferred till further notification, but let us understand that what is the background of NOCLAR. I'll just give a very simple example to start with, that it becomes easier. Let us say presently that I have been appointed as an auditor of a company. It is a real estate company. So normally I would ask this question, that whether as a professional accountant, whatever are the expectations of the stakeholders, should I limit myself to only the Companies Act and the Income Tax Act or the GST law, that is basically the financial laws that are applicable, or as an auditor, let us say the company has taken a permission from RERA to construct a 7-story building. It is a real estate company into construction. And I find during the course of my audit that actually the company has constructed 10 stories. So it does not come under the provisions of the Companies Act or any of the financial laws. So my question to our friends here would be that, should, as an auditor, I should have cognizance about this violation or non-compliance with the laws and regulation? Or should I say that when others are looking up to me as a professional accountant, that I would give a true and fair view, I would ensure that their money, whoever are the stakeholders, public interest, बैंक का पैसा लगा हुआ है, listed company है, shareholder का लगा हुआ है, कि कोई भी non-compliance हो, and I would, as a statutory auditor, as a professional accountant, say that, you know, since this is not in the scope of the Companies Act, I would not highlight this, I would not report this, I will not bring it to the attention of the stakeholders. So this is the background of NOCLAR, and this is something which has now been accepted throughout the world, and in India also. See, if I see what is the background, like I said, I'll just go through what is there in the slide. It refers to any act of omission or commission committed by a client or employer contrary to prevailing laws or regulations. So like I gave the example with respect to RERA. There can be any other thing also, that in any other industry, let us say there is a pharma industry, and you know, there are some pollution control issues, or not that the factory has shut down, but there are some licenses which have not been renewed, or there are some difficulties that are being faced on the labor front, which might not be directly covered under my reporting under the Companies Act or the accounting standards, but still they are significant because there is certain non-compliance with the laws and regulations. So that is where the background is for this NOCLAR, and presently NOCLAR has very limited application as far as India is concerned. Worldwide, what I understand is that NOCLAR has been made applicable to all services that a professional accountant provides. Friends, let me highlight that NOCLAR is applicable to both in practice as well as in service. So let us say I am a CFO of a company, And over there, like I said, a similar real estate example, that where, instead of 7 stories, I come to know that there 10 stories are being constructed in one of the projects out of, let us say, 40, 50 projects that the company might be having. Then as a CFO, what is my responsibility? Should I keep myself limited only to their financial numbers? So that is what is the background. So presently, like I said, there are limited applications with respect to NOCLAR. That first is applies only to listed entities in India. Presently, whatever is the provision, it applies only to audit assignments. So let us say you are a consultant, you are an advisor, you are doing their tax return filing or some GST compliance you are doing, and you come across any NOCLAR violation or any non-compliance, then it is not applicable to you, because it is only applicable for the audit assignments presently, because that is where the reporting to the external stakeholder comes, and it becomes important from that perspective. And in case of the professional accountants in service, it is applicable to employees of listed entities. So broadly, if I say, it is applicable to listed companies and it is applicable to the audit assignments only. So what is the scope? So again, it has a direct nexus to the professionals, our training and our expertise. That is with respect to laws and regulations that have a direct effect on the determination of material amounts and disclosures in the financial statements. That is one which we are doing presently. And with respect to other laws and regulations, compliance of which may be fundamental to the entity's business and operations or to avoid material penalties. So this is where the important aspect comes in, and I would say as well as a difficult part, because in India we all know that there are so many laws. You set up a factory and there are so many laws which are made applicable to an entity, and for a auditor of a listed company, and see, listed companies, we all know that they are normally multi-locational, multi-segmental, into multiple products and services, whatever it might be. And to find out that or try to come across all the non-compliances becomes very difficult. But that is where we have to rely, as an auditor, I would say we have to rely, many of these companies, listed companies, especially as part of the risk management policies, they make a presentation to the audit committee, to the independent directors, to the board of directors about the areas where the compliances are applicable and vis-a-vis the areas where there are non-compliances that the company has. So that can be I'm just suggesting that that can be one of the ways in which we can comply with the requirement. So what are the examples of the laws and regulations that are required to be addressed? This is an inclusive list. It is not exhaustive list, but it just gives a fair idea about where we need to chip in as a professional accountant. So the areas that are to be addressed would be with respect to fraud, corruption and bribery, money laundering, terrorist financing and proceeds of crime, securities markets and trading. We all know that SEBI is coming out very heavily on insider trading and all those aspects under the securities law. Banking and other financial products and services, data protection, tax and pension liabilities and payments, environmental protection, public health and safety. So broadly, these are some of the areas where there are laws and regulations which are specified and the company has been non-compliant with that, which would impact the operations or would result in material penalties to the company. Then we have to execute our responsibilities under the code of ethics as a professional accountant. So what is not in the scope? So we have seen everything that is in the scope, but let us also address what is not in the scope. Matters which are inconsequential. So like I said earlier, I was just backing up about materiality. So similar thing would come into this also, that which are clearly inconsequential, would not impact the operations or result in material penalties. So that would not be in the scope of the NOCLAR. Personal misconduct unrelated to business activities. So if a director or an employee has on his personal front done some illegal activity which would not have any bearing on the operations, so that would not be in the scope of the NOCLAR. Non-compliance other than by the client or the employer or TCWG, that is those charged with governance, management or other individuals working for or under the direction of the client or the employer. So if it is non-compliance by a third person, then also it would not be part of the scope. A professional accountant required to address NOCLAR only when and if he encounters the same in the course of providing a professional services, right? So as a part of our audit, as a part of our routine services, if we come across NOCLAR, then we are supposed to report. We don't have to dig deep. We don't have to take it as a separate responsibility and go into each and every area and find out under each and every law whether the company has complied with it or not. If as a part of our audit process we do come across this, then it is the application that is made mandatory to us. And where do we report? In case there is any such violation, then we have to report to the appropriate authority for the purpose of disclosure, which would depend on, let us say, if it is a listed entity under SEBI, then it would be SEBI. If it is a bank, then it might be RBI. If it is an insurance company, it might be IRDA. So whichever is the appropriate authority, we have to report about the violation with respect to the NOCLAR. So this is broadly giving a backdrop and understanding of NOCLAR, and so that whenever it is notified, we are able to deal with it. Breach of independence provision for audit and review engagements. So friends, there is a mechanism of self-correction. Like I said, the safeguards, the self-corrections that have already been prescribed in the code in case of the professional accountant, if on his own he discovers an unintentional violation. I'll just give a very simple example. That let us say, I am the auditor of a listed company, and I find out that an employee, an audit manager who is in that company, who I have assigned for the audit responsibility of that company, I find out at a later that some of his close relative is working in that client company of mine. And I have put this employee as the team to audit that particular company. So then, that becomes a violation of code. It was unintentional. I didn't know that. So what is the safeguard? So, I can always say that, fine, I would bring it. First of all, I'll bring it to the notice of the independent directors, those charged with governance, that this has happened. It is a violation of our, maybe my firm policy or even the code of ethics. And what is the safeguard? I would say that I am immediately withdrawing that person from the audit team, and I would continue with the audit. So if you remember, I had said, I had shown a framework where I say that, there is a threat and I have safeguard. If I'm able to use that safeguard and come out of that threat, then I would continue, I would accept and continue with that assignment. Otherwise, I cannot. It was in a flowchart form. So similarly over here also, that the code itself, it mentions the steps that can be taken in case there is a breach of independence under the standards. So a professional accountant, we identify the breach, we shall evaluate what is the significance of the breach and the impact on our ability to comply with the fundamental principles. What we said are the integrity, objectivity, professional competence and all. And finally, if we conclude that the breach of a requirement has occurred, then what do? We end, suspend, or eliminate that interest that created the breach. Like I said in that example, that I will withdraw that employee from that audit engagement. Right? Wherever there is a conflict of interest, I would withdraw him and I would then continue with that. But somehow, let us say I am not able to do that. Let us say as a partner, I have invested into the equity shares of a company where I am the auditor, or my wife has invested, which is violation of the independence requirements under the Companies Act as well as under the Code of Ethics. Now, whether I can overcome, even if I sell the shares, whether I can say that I have been able to overcome that breach, maybe not. Then what would happen? So then we might have to withdraw from the assignment, or we might have to consider whatever is the applicable legal or regulatory requirements and apply them. So there might be that I have to make a disclosure to the board or independent directors, to the SEBI, to MCA, whatever it might be, and wait for whatever they say, or I might then withdraw from the assignment. So it all depends on what is the significance of the breach that has been committed with respect to independence, what are the available safeguards, and whether I am able to overcome that or not. So all these things have been given very clearly in the revised code of ethics. When we talk of independence, see, again, I'll give this example with respect to the small and medium practitioners, keeping the tax audits in mind. So what is the period in which the independence has to be maintained? So normally what happens when it comes to tax audit, if I talk of financial year, let us say the current financial year 2021, when it comes to the tax audit, the appointment is normally done sometime in the month of July. Let us say it is a new assignment that you are getting, then it would come sometime in the month of July. and the due date being September, you would sign off in the month of September. So what the code says that independence shall be maintained during both the engagement period and the period covered by the financial statement. So my engagement period is, let us say, 1st July I'm getting the appointment, and all the services and everything ends on 30th September 2021. So that is my engagement period from 1st July to 30th September. I have to maintain independence for that period, and also the period covered by the financial statements, that is from 1st April 2020 to 31st March 2021, the 12-month period which I am supposed to audit, for which I have been appointed as the auditor. So I have to maintain my independence both for the engagement period as well as the period covered by the financial statement. So if I have any conflict of interest during the financial statement period, let us say hypothetically that I was the internal auditor, or I had done some stock audit or some services which are not permitted under the code, and I have done that during the financial year 2000, or for the some period of the financial year 2020-2021, and although I have been appointed in July, I cannot say that since my appointment is in July and I have done this work or this provided this service before that, that there is no conflict of interest. There is a conflict of interest, and I have to use the safeguard, whatever is prescribed under the Companies Act, under the Code of Ethics, whether I'm able to overcome that. There are, like, if you have already done an internal audit for the first 1 month or quarter of financial year 2021, then that is something that even the safeguards would not be able to help you out, and because there is a direct conflict of interest, because for that period you have done internal audit and now you would also be doing the statutory audit or tax audit, and therefore there is a clear-cut conflict which cannot be overcome, and therefore you would have to do away or not accept the tax audit assignment. So this is how you have to see with respect to the independence requirement, whatever is the period of the independence. Key audit partner. Again, this was not mentioned or defined in the 2009 code, which is now forming part of the 2019 code. And this is a very important definition again, because normally we have the engagement partner, somebody who signs the financials. We have the engagement quality review partner, quality control review, EQCR, that is what we say. But see what happens that in a company which is multi-locational, then there might be, that there are different partners who are looking after different areas, especially in the case of large companies. There would be a couple of partners who would be looking after some division or some segment or some geographical location, and another partner would be looking after some other areas, and this is how the work would get distributed. So if you look at the definition of key audit partner, see where the key audit partner is important is because the code also prescribes a rotation of partners, which is not there under the Companies Act, but it is there under the Code of Ethics, and therefore it is important that we understand the definition of the key audit partner. So if a key audit partner would be the engagement partner, the individual responsible for the engagement quality control review, and other audit partners, if any, on the engagement team who make key decisions or judgments on significant matters with respect to the audit of the financial statements on which the firm will express an opinion. Depending on the circumstances and the role of the individuals on the audit, other audit partners might include, for example, audit partners responsible for significant subsidiaries or divisions, right? So you would have the engagement partner, you would have the EQCR partner, and other partners also who would be part of that particular assignment. And we have to check the independence of that also. Firm rotation. We have now the firm rotations. See, in my view, if we look at the code, the firm rotation section 550, what the code in India, as we have converted, we have taken the firm rotation principles or the guidelines or the provisions from the various laws and incorporated that under section 550. So that is under Companies Act, under RBI also, under C&AG, under NBFC, under IRDA, whatever are the rotation policies or the provisions under the various laws, that has forms part of our firm rotation guidelines under the Code of Ethics. See, firm rotation in many of the foreign countries, they don't have a concept of firm rotation, and therefore in such countries under the ISBA code of ethics, for such countries the firm rotation would be guided by the code of ethics for in those countries. But as far as India is concerned, since our Companies Act has stipulated and other regulators have also stipulated the firm rotation, our firm rotation policy would be guided by the such provisions of the law. So now there is a partner rotation that has come in under the new code. It was there earlier also, but there are certain changes which are made. So first of all, it is applicable only in case of the public interest entities. Under Companies Act, partner rotation is not mandatory. It has not been prescribed by the law, but it is done on the behest of the company only. So if the shareholders insist on any partner rotation, then only it would be applicable. Otherwise, partner rotation is not applicable under the Companies Act. And therefore, for us, what would happen is that we will have to follow partner rotation as given in the Code of Ethics. If we look at what are the provisions of the partner rotation under this Code of Ethics, one is the 7-year time on. That means you can, for a continuous period of 7 years, be associated with a client or with respect to the audit assignment. Now that 7-year time on would mean that maybe, so it's not that you are 7 years as an engagement partner or 7 years as a EQCR partner, but it can be in any capacity, that 7-year period. So maybe for the first 3 years you are engagement partner, and then 4 years you are as the EQCR, or you are a key audit partner looking after some division, and thereafter you are as the engagement partner, and then you become EQCR. So, but all these provisions, all these combinations, all these mixing and matching, such situations have been provided in the relevant section under the Code of Ethics. So you can go through that in detail, that what are the combinations under which these partner rotations is applicable. If we look at 7-year time on period, so there is no change between the two codes, 2009 and 2019, as far as the time on period of 7 years is concerned. But there is a significant change on the cooling period. Under the 2009 code, once the 7-year time on period is triggered, then the partner had to rotate and had to retire from that particular assignment, and there was a 2-year cooling off period. But under the 2019 code, for different categories of partners, there are different cooling off period. So in case of engagement partner, it is a 5-year cooling off period, EQCR it is a 3-year, and in all other key audit partners, it is a 2-year cooling off period. Friends, my issue here is that, it would throw upon certain very typical situations, especially when we have a rotation of company under the Companies Act. Again, having a rotation of partners in some cases might lead to I would say a discontinuing of the qualitative aspect as far as an audit firm is concerned. I'll just give a simple example, that the firm has been appointed as auditor of a listed company for 5 years. So after 5 years being a firm, they are eligible for another period of 5 years for their appointment. So let us say in the AGM, the shareholders appoints the same firm for another period of 5 years. So now what would happen if we look at the 7-year time on period? So first 5 years, and then in the second term, then another 2 years. So for 7 years, I can have a 7-year time on period. And the engagement partner would have to be then rotated out for a period of 5 years. That means that in the next 3 years, he would not be involved in that engagement. Or if he has been as EQCR, then there is a 3-year cooling off period. Or even a key audit partner, a 2-year cooling period, and then that key audit partner can come in on the 10th year, because up to 7 years he is there. 8th and 9th year he would not be there, he would be under cooling off, and then he may come in the 10th year, which would be the last year, under the second cycle, and then compulsorily the firm has to be rotated out because the 10-year period would be completed. So if we look over here, that whatever expertise with respect to the industry or that company, there can always be a possibility that the engagement partner can become the EQCR, because he has gained a lot of experience, a lot of knowledge with respect to that industry, with respect to that client, and he can then become a controller or quality controller for that assignment, and may not be directly involved as an engagement partner, but he can be a EQCR. But under the new provisions, he would not be able to be anywhere associated with this client once the cooling off period triggers in, and that might become challenging for the audit firm, that in the last 2 years or 3 years of their assignment, because then after 10 years they have to get rotated out, that they will have to bring a new team at the helm of affairs for that client, and that continuity might get a bit disturbed. So this is where, because see, internationally, since there is no cooling off of the audit firm, the cooling off of partner does make sense. But over here, since our law provides for cooling off of the firm, maybe there are a few challenges that get thrown up when we talk of the cooling off of the partner or partner rotation. So during partner rotation, what are the activities that the partner under cooling off he cannot do? So he is prohibited on consulting with engagement team regarding technical or industry specific issues, transaction or event. So basically the audit team, let us say I am under cooling period for a client. So whosoever is the team member, I would not be engaging with them on any of the matters with respect to that client. Prohibition on leading or coordinating the professional services provided by the firm to the audit client or overseeing the relationship of the firm with you. So one is with respect to audit team, I can't interact with them. Second is that if there are any other professional services also that are being provided, or there is a relationship manager or relationship partner for that particular client, I would not be able to execute those responsibilities or carry out those activities also for that particular client during the cooling period. And prohibition on undertaking any other role or activity that would result in the individual having significant or frequent interaction with senior management or those charged with governance, or exerting direct influence on the outcome of the audit engagement. So you can say that in short, that I would have to totally disconnect myself from that client and all activities relating to that client during the cooling period. So that is where I said that the difficulty seems to creep in, that for the last 1 or 2 years, that the audit assignment would continue, that there would be a significant change that would be required. So actually firms need to plan this partner rotation, and rather than at the 7 years, maybe after 5 years, once the reappointment comes for the next term of 5 years, they need to rejig their team and maybe keep the engagement partner in some consultative role for the 2 years, so that in 7 years when the cooling off happens, there is a team which is in place to continue for the next 5 years. Management responsibilities, friends, this is one provision where there is a lot of confusion, I would say, and different terminologies being used differently. So on one side, we have management responsibilities. When we look at section 144 of the Companies Act, it talks about management services. And therefore, we are at times in a dilemma that what comes under management responsibilities, what comes under management services, what are the services that are prohibited under the Code of Ethics, what are the services that are prohibited under the Companies Act or other rules and regulations. So the Code of Ethics very clearly mentions that the firm, it will not assume a management responsibility for an audit client. And what is management responsibility? It is like controlling, leading, and directing an entity, including making decisions regarding the acquisition, deployment, and control of human, financial, technological, physical, and intangible resources. So any of these resources, wherever there is acquisition or deployment, and as a audit client, as a firm, having that as an audit client, I involve myself into any decisions making that is not at all permitted. So we have a recruitment service, but I'm just giving an example that let us say that they want to appoint a CFO, and I am part of that panel being a statutory auditor to appoint that CFO. So, that is assuming a management responsibility, and that is not permitted under the Code of Ethics. So this is where the decision making comes, and that is where is the responsibility, and that is where is the restriction. But if I'm providing an advice and recommendation that assists the management in discharging its responsibility, it is not assumed as a management responsibility. So, providing administrative services, it does not mean that I am assuming a management responsibility, because I am not taking any decision or helping the management take any decision. So it is something like a word process. Some examples are given from in the code itself, like word processing services, preparing administrative or statutory forms for client approval, submitting such forms as instructed by the client. So let us say like an income tax return. I am doing an administrative work on behalf of the client. I am filling that form and a statutory form. I send it for the client approval. The client approves it, and I then upload it. So I am not making any decisions. I'm not taking any decisions for the client. I am just doing an administrative work and supporting the client in such administrative work, which is permitted by the Code of Ethics. So monitoring statutory filing dates and advising an audit client on those dates. So, we have this due date calendar, and we send a message for the due dates to the CFO and those charged with governance that these are the due dates and you need to comply and all those things. So there also there is no decision making. It is more of administrative work which I'm executing, and hence that is permitted. And it's a management responsibility under the Code of Ethics. So when we talk of non-assurance services, the Code of Ethics has given a lot, very detailed services about what can be done, what cannot be done, or something which can be done by applying necessary safeguards under the code. So we will take those in detail about providing non-assurance services to audit clients, because they might create threats, that is a self-review threat or a self-advocacy threat, self-interest threat also at times, and therefore we need to see how we are able to apply the necessary safeguards and overcome the threats. So with respect to accounting and bookkeeping services, it is prohibited by the ICI, the Code of Ethics. We cannot do accounting and bookkeeping services for an audit client. That is prohibited under the Companies Act also, and if I say for non-corporates, it is also prohibited by the ICI for all types of entities. We have the Code of Ethics, which gives a guidance about what constitutes accounting and bookkeeping. So I will not go into that. I have given the reference of the subsection. Members can just go through that. Administrative services, we have already discussed earlier what constitutes administrative services, and that is permitted to audit clients. And because, like I said, that there is no decision making where I am involving myself when I am providing administrative services. Valuation services, again, this is now part of the management consultancy services guidelines of our institute, where valuation of shares and business and advice regarding amalgamation, merger and acquisition. It has been considered, provided necessary safeguards are there, that I am not giving any guidance when I'm preparing such things on any accounting treatment or any guidance with respect to certain tax stands that I'm taking, which subsequently I would be required to certify on that. If those safeguards are in place or there are no such transactions or advices that are being given, then we can provide these services. So volume 1, it prescribes the threats and safeguards in providing valuation services to the audit client. Like I gave an example that it should not in any way be a self-advocacy or a self-review threat where I'm advising on certain things and which I subsequently need to certify. Internal audit services, this is prohibited by the Companies Act, Section 144 very clearly, and also by ICI to the other clients. Information technology systems, when providing these services, the professional accountant shall ensure certain things like client acknowledges its responsibility for establishing and monitoring a system of internal controls. See, over here also, because in our audit report, we give reference of the internal controls. In certain companies, we even give the internal report on the internal certificate on the internal financial control over financial reporting. So again, the same thing, that if I am involving myself in advising or designing any information technology systems or any processes, it should not happen that those processes are such that will form part of my audit report or audit review. Then there is definitely a self-review threat, and either I apply necessary safeguards for that, or I cannot take up that assignment as an information technology systems advisory or any structuring of those things. Litigation support system. Again, this is with respect to the cases or that we might be having and representing clients on various matters. So the examples are assisting with document management, acting as witness, and calculating estimated damages. So these can be part of the litigation support systems that could be there. So the code permits that, but it says that you should provide safeguards if providing a litigation support service to an audit client and the service involves estimated damaging or other amounts that affect the financial statements on which you express. So let us say you are estimating an opinion. I am representing the client. It's my audit client. I am representing the client on a, let us say, with the Commissioner of Income Tax Appeals. Now, when I am representing there, I am saying that this is the estimated liability that would come, and I am helping the client on that. Now, that estimated liability, when it comes to an assurance services, I would be required to certify that as a contingent liability. And also, if you look at the accounting standard, that what is possible, what is probable, I would be doing those analysis and then certifying that as a contingent liability. Therefore, on one side, I am, using my skill sets to calculate the estimated damages, and then on the other side I am also certifying that as part of the assurance process. So that is where the threat comes in, and there has to be adequate safeguards if it is possible, and then we have to put in those safeguards in place before doing such support services. Legal services also very similar, that might create a self-review or advocacy threat. And a partner of or employee of the firm shall not serve as a general counsel for legal affairs of the audit client. Because what happens when you are doing a representation, let us say I am on a particular section of the Income Tax Act with respect to certain deductions or exemptions or certain claims. You are representing the client and taking a view, taking a stand, or advocating that this is what is the interpretation of the law and this is how it should be, right? And at this, then that very view you would be taking when you are reviewing the provision for tax figures or estimating the contingent liabilities, that view. So the provision says that if it is a very settled law, let us say some disallowance has been made, but then there are some earlier judgments which is very settled in favor of the client, in favor of your client, that this deduction is allowed, and for any reason, whatever might be the reason, the assessing officer has disallowed that, but it is a settled position that this claim is allowable. Then in such case, definitely you can represent, because you are not giving your view or you are not advocating something which is a settled law as per the other earlier case laws or whatever. So you have to be very selective and ensure that you are advocating things which would not become a self-review or a advocacy threat. Corporate finance services, again, this is very similar to the 2009 code, that you would not do any underwriting with respect to the client's shares or promote or dealing with the client's shares. And you would also not provide, a firm shall not provide corporate finance advice to audit clients where the effectiveness of such advice depends on a particular accounting treatment or presentation in the financial statements on which your firm as an auditor will express an opinion, right? So again, I would say we have to see, I would broadly, when I was reading this, broadly what I feel is that when we say something like a maker checker, I'm giving a very crude example for us to understand it better, that we normally say that the maker and the checker should be different. That is what we insist with when we talk about internal controls and all those things. So similarly, when we are providing these services, we have to ensure that the maker and the checker, so if I have to check that as part of my audit process, I have to ensure that the maker is not somebody from my firm, but somebody other than my firm. And if I'm making something, if I'm involving myself into something, I have to ensure that does not form part of my responsibility as a checker. So broadly, this is what I could understand, I could gauge, I could correlate as a maker-checker principle. Recruiting services, I already made reference to that earlier, that there are now clearer guidance on the types of recruiting services, and that is prohibited. That we cannot assume management responsibilities when providing recruiting services, which is similar to information technology systems and internal audit and all those things. And it would apply to all entities and including searching for or seeking out on candidates. Even undertaking reference checks for prospective candidates, that we cannot do, because ultimately that CFO, that senior level personnel, is somebody with whom I would be interacting with respect to my audits, with respect to my assignments. See, let us say if it is at a data entry level person or a person who is at the accountant level, I might involve myself in his or her recruitment or appointment, because that is a level which is not of a key management personnel, or that person at that position would not be a main decision maker with respect to that client. But at a senior position where there is going to be decision making and interaction with respect to audits and assurance services, that is the level where there is a prohibition with respect to providing any recruitment services. Taxation services to the audit clients, like I said, that this also has been kept in abeyance presently. So it includes compliance, planning, provision of formal taxation opinions, and assistance in the resolution of tax disputes. Such assignments are generally not seen to create threats to independence. So, like I said, this has been deferred. Further guidance are expected with respect to the tax. But if we look at what is there in the present code, what has been provided with respect to tax return preparation, usually no threat. Like I said, that would form part of management, that would not form part of management responsibility, but more of an administrative service, and therefore that can be done. Second way, if I look at it, is that the tax return filing is post audit. So whatever has been audited has been reported in the tax audit. Usi ka compilation hoke, we are giving it as part of my income tax return. So usually there is no threat unless there is some. So we are coming to the next portion on that. Tax calculation for the purpose of preparing accounting entries. So like provision for tax or depreciation. If we are doing such calculations which subsequently we are only going to audit, so that creates a self-review threat, and therefore it is not permitted by the code. Tax planning, other tax advisory services, like again I mentioned earlier, that might create a self-review or a advocacy threat, and appropriate safeguards to be adopted. So what can be one of the safeguard is that you have a totally dedicated different team which looks after the tax advisory services, and you have a totally different team, I would say, right from the bottom of the employee to the partner, with a totally different team which looks after the audit services for that particular client. So these two are totally different. They are two different, I would say, departments within the firm, the tax advisory and the assurance. And in such case, you can say that you have put adequate safeguards, that whatever opinion the tax advisory team is giving, but as an auditor, when I am looking into that, I am applying my own principles, my own knowledge of law, and interpreting it accordingly, and not getting, I would say, moved by or interested by what opinion within the firm another team has given. So that can be one of the ways, as suggested by the Code of Ethics, can be the safeguard. That is, using professionals who are not audit team members to perform the service, or having an appropriate reviewer not involved in providing the service, review the audit work, etc. The fourth is tax services, which include valuation. Again, this you may perform only where the result of the valuation will not have a direct effect on the financial statements. Assistance in resolution of tax disputes might create a self-review or advocacy threat. So here also, like I mentioned earlier, that we have to put appropriate safeguards, that maybe you have the team, the tax team, which is totally different from the other team which is there doing the providing the assurance services. There has to be a clear-cut demarcation between the two. So safeguards, the Code of Ethics 2009, they had given that safeguards to be considered for threats other than which are clearly insignificant. Over here, under the 2019 code, the application of safeguards, required to eliminate threats or to reduce them to an acceptable level. So there are certain threats which you have come across, and you have to apply these safeguards in such a way that the threat comes to an acceptable level, and that acceptable level is such where the third party which knows the facts would conclude that the accountant complies with the fundamental principles. So you have brought it to that level that any stakeholder or those charged with governance or anybody who looks into that particular threat, after the safeguard has been applied, they find that it's still you are able to comply with the fundamental principles. So how do you address these threats? You eliminate circumstances creating the threats, you apply the safeguard, or you decline or you end the service. So this we have discussed in detail. So I would not dwell upon more now. Yeah. Inducements including gifts and hospitality, specific sections that if the client, so now first of all, I'll just explain this rather than going through it, that what type of gives hospitality, if let us say a client, he sponsors a trip, a holiday or something like that for the firm, audit firm, then that definitely becomes inducement. Or let us say that there is a marriage in the family of the partner of the audit firm, and whatever is the normal social I would say practice of gifting the child during the course of marriage, and vis-a-vis what the client gives, as per the social norms of it, if it is way beyond whatever are the acceptable practices or acceptable limits, then definitely that would become an inducement. So such gifts, hospitality are what is prohibited. If you get, I would make it very simple, because we do many of us do get that if you get a mithai packet or something like a dry fruit on a Diwali once in a year, and which is a regular practice that client sends, other clients also send during that phase or that festival, then in my view that would not be in inducement. Why? Because one, it is customary, it is a practice the client gives to others also, other of his suppliers or service providers also, and he's giving to us. Second is that other clients also give to the CA firm during such point in time. And third is that the amount or the value is not very significant or very high, and therefore it is part of the customary practice which we can take it forward. I'll just excuse myself for a minute. Just yeah. So under inducements, gifts, hospitality, that is what is important that we have to see. And this extends to the practitioners in service also. Chartered accountants in service also is something where this particular provision applies. Documentation, again, this is something that is there in the 2019 code about the documentation requirements. So where safeguards are applied to address a threat, we have to document. So this is where we are applying the safeguard. So we need to document what is the threat that we have identified. What are the safeguards that we have put in place to minimize the impact or remove the impact of that threat, and also subsequently whether the threat has finally been minimized or eliminated or not. So all these, it needs to be documented under the code of ethics. And mind you, these documentation requirements presently that I'm saying are in addition to whatever documentation requirements that are applicable under the auditing standards. So those documentation requirements have to be followed, whatever Shripal has taken in the first session today. In addition to that, with respect to applying the safeguards, documentation under the code of ethics would be required. Fees, like we mentioned earlier, that this is the third provision that has presently been kept in abeyance. So we'll just review this. What are the provisions? Where for 2 consecutive years, total gross annual professional fees from the audit client and its related entities represent more than 15% of the total fees received by the firm shall disclose to those charged with governance. So here, my view is that, see, earlier the provision was that if it was 40% fees, and over there, then there was a total ban on accepting such assignments. Now that 40% threshold has come down to 15%. And if it is for 2 consecutive years, then we have to inform those charged with governance. It's not that we have to remove this or withdraw from the assignment altogether. The flip side of it is, especially with respect to small and medium practitioners, that their dependency on one client would definitely, I've seen in a lot of cases, is definitely there. And in such cases, there are chances that if he goes to the proprietor or the partner or somebody, the director, and say that as per the code of ethics, I am supposed to inform you that your fees that you are paying me is in excess of 15% of the total fees that my firm gets. Then in such case, there are chances that the firm would be put into a difficult situation with respect to that client. That client might then say, now I will not increase fees or whatever it might be. So over here, my suggestion to the council would be that this should be kept restricted. And see, when we say that we have to communicate with those charged with governance, so when we talk of the small and medium enterprises, those charged with governance are same as the promoters or the owners, and there is no distinction between those charged with governance vis-a-vis the owners of the entity. This is more so in case of the large companies, the listed companies, where there is a requirement, there is a separate, the independent directors are there, there is an audit committee which comprises of the independent directors, and they are independent of the owners. And therefore, my suggestion over here would be that this provision should be kept applicable like we have under NOCLAR. Over here also, this should be restricted for listed company clients only, or firms which are auditing listed company clients. It should be to that extent only, and only for those clients where there is a scope for the auditor to approach the audit committee and tell the audit committee that yes, the fees that the company is paying me is in excess of 15%. But these are the safeguards that I have put in place to ensure that there are no threats. There are no threats with respect to self-interest threat or anything else that I would compromise on my quality of audit or on my reporting, and I would be independent in spite of the fees being more than 15%, where the auditor can separately go present before the audit committee or those charged with governance, the independent directors, and get the reassurance that there is nothing, there are no compromises in spite of the fact being there. What are the other safeguards that the code has prescribed? One is that to have a quality control review before issuing the third year's finance. So for 2 consecutive years, if your fees is in excess of 15%, then the third year's financial statements, you have to get them reviewed by a quality control reviewer who might be independent of the firm. There are exceptions where the total fees of the firm is less than 5 lakhs per annum. I think this is a very, very small amount looking into the scope and the work that gets carried out by our professional firms nowadays, especially after the GST that has come in. I think 5 lakhs is a very, very paltry sum. And second is that in case of audit of government companies and all, because in these cases, the appointment are made by the government and fees is also decided by the government, like let us have a bank audit. So in spite of all our efforts, we would not be able to convince a branch manager or a banker that you please give me this much of fees, because that is stipulated by the Reserve Bank of India. So in such cases also, this would not apply. So this is with respect to the fees. And like I said, I would have 2 things. That one is that we should have a threshold of 5 lakhs that should be increased. And second, it should be made applicable only where there is an independent, there are independent directors and a separate audit committee, which is not owned by the promoter or the owner. Overdue fees, again, on WhatsApp, I remember a lot of these messages were being circulated with respect to overdue fees. The backdrop over here also, there are safeguards that have been provided. But the backdrop, I would say, is that, that let us say March 20 tax audits everybody has completed, raised the invoice and sent it to the client. And the client again, this is a practice which happens in a many small and medium practitioners, is that the client would pay the fees only when you are about to sign the next year's, that is March 21 tax audit report or the financial statements or whatever. So it is outstanding till that point in time. So I believe the reason is that, when those fees are outstanding, the logic behind having this provision is that when the fees are outstanding, then whether as a chartered accountant, that has a bearing on my mind when I am expressing or giving my opinion in the next year's financial statement. That is something which we need to keep it in mind. And that is why this provision and the safeguards, that there has to be an appropriate. So first of all, I believe by way of this, and let me be very candid, by using this provision from the code of ethics, I sent it to one of my clients. I would say, see, all firms have such clients, irrespective of the size of firms or whatever. And I actually sent it to one of my clients whose earlier invoice for March 19 audit was pending. I sent this provision, this is what is there under the code of ethics. And I tell you, in 3 days, the money came into my bank account. So if we look at it in a negative perspective, I feel there is a positive side also, that we can use this and get maximum inflow as early as possible. So, but yes, there are safeguards that are built in, that you have to then demonstrate that fees amount that is outstanding from that client. This is my suggestion, that it is insignificant. It is nothing like that I have given loan to that client because that client himself has got sufficient net worth, and it is just for other reasons that amount has not been paid to me. So the whole backdrop is that this should not tantamount to a loan given by the audit firm. The credit should not tantamount to a loan given by the audit firm to the client. And it might have some bearing, that realizability might have some bearing on the audit opinion or on the audit process that are being followed in the subsequent year. And so all adequate safeguards that have to be put into place, like I said, demonstrating about the net worth of the client, or it is a normal practice of the firm that everybody pays like that. And also to maybe in some cases to have an external review done with respect to the audit processes and the audit opinion. Indebtedness, 1235. Yeah. So there was no concept of materiality as far as loans and guarantees under the 2009 code. So now here there is a concept of materiality, but we have the indebtedness under the Companies Act, which has been very specifically provided. And as per Chapter 10 of the Council General Guidelines, such limit is rupees 1 lakh rupees. So as per the statute, or rupees 1 lakh. So this is what is the threshold that loans and guarantees we cannot have outstanding beyond what is specified in the statute, or rupees 1 lakh. Otherwise, that would be conflict of interest, considered as indebtedness to the client, and that audit assignment should not be accepted till that indebtedness or that is removed. Friends, now I will go to some specific provisions with respect to, I would say now we are moving into till now we had covered principally what was under the volume 1, that is the ISBA Code of Ethics. Now I will go into some of the specific provisions with respect to the Code of Ethics that have been provided in the volume 2, that is by our CA Act and the regulations and the council guidelines. So first is with respect to engaging in business occupation other than CA. That means any other than that of a practicing chartered accountant. So over here also our regulations say that it is not permitted unless it is permitted by the council so to engage. There are some general relaxations that have been provided by the council, like becoming a director simpliciter or an independent director, where you are not involved in the affairs except for the board meetings. Now that is allowed generally. You don't have to take any specific permission from the council to become a director simpliciter. So which means that you are not a managing director or a whole-time director, and you are required only in the meetings. However, such concept of a director simpliciter in case of LLPs, there is no general exemption that has been given by our council. Therefore, we cannot become a partner or a designated partner, a sleeping partner, where there is no working, no remuneration, but still only director is permitted, partner is not permitted. And in case you are to become partner in such firm which does not carry out any professional work, then you will have to take the permission of the council, and then only you can enter into the partnership. General permission, again, the council, it has given about what are the activities other than as a practicing chartered accountant that you can engage in. That is employment with CA firm, that is applicable to our CA employees. Private tutorship, authors of books and articles, holding public offices like MLA or MP, honorary office bearers of charitable trusts, NPOs, notary, valuation of papers, paper setters, examiners, all these you can do, and you need not take any permission of the council for any of these activities. Part-time tutor in coaching organizations of the institute or editorship of professional journals, all this you can do freely. Acting as a loss surveyor under Insurance Act, recovery consultant in banks, owning agricultural land and carrying out agricultural activities. So these are all the general permission that the council has given under the regulations and the act which you can do. Special permission you have to take from the council, being lecturer in a university or college, where total direct teaching hours should not exceed 25 hours a week. So if I am a member holding COP and I want to, let us say, get associated with the MS University in Baroda as a lecturer, then I have to take the permission of the council, and it should not exceed more than 25 hours a week. Then editorship of professional journal or of other than professional journals, or managing director, whole-time director, in such cases also you have to take special permission of the council. Part-time in practice, again, the general permission is given to members also who are in part-time COP holders. So whatever we discussed in the earlier slide, that would be applicable to members holding part-time COP also. But a member holding part-time COP is not entitled to perform a test function and shall not be entitled to train article assistants. So this is something that a part-time COP holder, since he cannot perform a test function, he cannot sign, he cannot generate UDIN. So part-time COP holders, if they want to do any attest function or have articles, they have to take a full-time COP. With respect to HUF, so what is the council guidelines with respect to a member in practice being a member or a karta in a HUF which is doing business? So first is that the HUF or the business must result from inheritance, succession or partition of the family business. That is one. Only after specific and prior approval of the council that you can become the karta which is doing business activities. As a karta, otherwise you cannot have an active role, and attest functions are not permitted. So if you are a karta executing business activities, then you can only take specific approval of the council, but attest functions are not permitted. A clarification has been incorporated that a member engaged as karta of a HUF doing family business will be within the limit prescribed by the council if he makes investments from the funds pertaining to HUF only. So if you are just managing the funds, doing just investments, उसके surplus है तो उसका fixed deposit किया या stock market में invest किया है या mutual fund है या ऐसा कुछ, if you are just doing that, but you are not actively engaged in the management of the said business, then there is a general permission and you can become the karta of the HUF. Sharing of fees or profits. So you, a member would be guilty of professional misconduct if he shares any, if he gives the shares of the profits or commission or brokerage in the fees to any person other than a member of the institute or a partner or a retired partner. So you can give share fees or commission with such members. You can share with the legal representative of a deceased partner. You can share with a member of any other professional body or with such other persons having such qualifications as might be prescribed. So we'll come to that prescribed qualification in the next slide. So this is about sharing fees, giving away fees. Second is receiving fees in profits from a non-chartered accountant. So you are not allowed to. So a member would be guilty of professional misconduct if he accepts or agrees to accept profits of the professional work who is not a member of the institute. So just like you can give to another member, you can take from any other member. But such restriction shall not be applied where it is member of such professional body or such other persons having qualification as referred to earlier. So this is more in reference to the multidisciplinary partnerships that our institute is envisaging to start. So if it is a multidisciplinary partnership, then what would happen is that you would join hands, let us say with a company secretary or with cost accountant or some actuary or an advocate, and in such cases you would be required to share fees. Therefore, these amendments have been brought about by which you can give fees also with members of certain institutions which have been prescribed, professional bodies, and you can take fees also from such members or such bodies. So what are the prescribed professional bodies? The ICSI, the Cost Accountants Institute, the Bar Council, Indian Institute of Architects, actuaries, professional bodies or institutions outside India whose qualifications relating to accountancy are recognized by the council. So these are the professional bodies and prescribed qualification: CS, ICWA, actuary, BTech, RTA. So these are the list with whom you can share fees or with whom you can receive fees. So sharing of fees or profits is allowed with above persons. There is no bar in sharing of fees if it is stipulated by any statute. Like you have under the, I understand, Maharashtra Cooperative Societies Act, where sharing of fees is prescribed by the act, where you have to give certain portion of your fees. In such cases, because it is prescribed by the laws, then that is also permitted. And referral fees amongst members has now been permitted under commentary to clause 3, but we also have to refer to certain safeguards about referral fees. So this is with respect to sharing of fees or profits. Like I said, that entering in partnership, I was talking about multidisciplinary partnership, that now our regulations, they permit that we can enter into multidisciplinary partnership. However, though the regulations are in place, they are still not allowed because other professions also need to allow, and ICI, they need to give out the modalities about what are the processes that are need to be followed and the checks and balances with respect to entering into the multidisciplinary partnership. But now by way of regulations that is permitted, but we have to see the final stage, similar permissions by the other professional bodies also, and the modalities. Tendering guidelines, again, this is something where there is a lot of discomfort, I would say, as well as a lot of regulations which we need to comply with under the code. So tender for services or areas which are exclusively reserved for chartered accountants, they should not be responded unless minimum fees has been prescribed in the same. So open tenders where there are no minimum fees prescribed, that should not be any tendering that should be done. The institute ICI at the council level also, they have a tender monitoring group where they review all the tenders that are come up, or even in case you come across certain tender where no fees are prescribed, you can escalate it to the tender monitoring group, which would then take or interact with the organization which has released such tender to make the necessary modifications or amendments to the tender. Tenders for services areas that are open to other professions along with chartered accountants, they can be responded to us in spite of other professions also being there. Tender for fees or areas that are open to CS and other professionals, but tender document specifies that only CS should apply. Such tenders can be responded. Assignments where quotations have been called for from practicing members firms to individual registrars can be responded. See, in certain cases, what happens, it is not an open tender or a public tender, but it is a limited tender where 4 or 5 or 6 firms are shortlisted and tenders are, quotes are invited from them. In such cases also, the firms can respond. A member can respond to tenders where only technical bid has been asked for, followed by financial quotations request from the shortlisted members through individual letters. So there is an open, let us say hypothetically, there is a tender where the technical bids are invited first. Now, so there might be, let us say, 20 firms which have participated in that technical bid. And once that technical bid is opened and the evaluation is done, the entity has shortlisted 5 firms which qualify the technical requirements or the technical criteria. And then they send only to those 5 firms for the financial quote. In such case also, the firms can then bid based on the individual letters that have been received. The ICI can call for any papers, documents relating to bids submitted by members in response to the respective tenders. Stationery and visiting cards. We can mention the ICI diploma, that is DISA, DIRM, all such courses that we have done or passed the exam for. But certificate courses that have been passed, that cannot be mentioned on the stationery or on the visiting card. Descriptions like president of, let us say, Rotary Club or a Lions Club or this, that should not be used, that cannot be used. Designations like member of parliament, municipal councillor are not allowed on stationery. Vision, mission statements or catchwords are not allowed. Adjectives like ITAT lawyer, financial consultant, etc. should not be mentioned. However, insolvency professional and registered valuer is permissible now. So you cannot have advocate and all those things, but you can mention if you are into IRP and as a registered valuer. The date of setting up of the practice by a member or the date of establishment is not permitted. When a chartered accountant is allowed to practice as an advocate or a company secretary or a cost accountant, he cannot use both the designations at the same time. So either he will use the designation of a chartered accountant or he will use the designation of a company secretary or advocate or whatever, but he cannot use CA and another designation at the same time. Use of designation, chartered accountant allowed only on professional documents. Other places prefix CA can be used. Members being director in companies. So we said that earlier that director, simpliciter or independent directors is permitted. Or members of political parties or CA cells in the political parties holding different positions are not permitted to mention these positions. So if I'm a director in a listed company, I cannot in my visiting card write that I am a director in that company or whatever. So that is prohibited. And if you have a qualification of a foreign accounting institute, which is having a MRA or MOU, that is a mutual recognition agreement or memorandum of understanding with our ICI, if you are holding the qualification of from that such institute, then you can mention such a qualification because that is permitted by the ICI. Solicitation of professional work. I'll cover a few aspects. There are a lot of them, but I'll just highlight a few presently because of the paucity of time. Associations with network as a medium of referral of professional work is permissible only if the network is registered with the institute, comprising only of chartered accountants or chartered accountant firms and governed by the institute's network guidelines. This announcement was made on 11 December. So I'll give a very simple example that we have this, and at that point in time, that was a burning question with respect to the BNI. That there were many professionals who were members of BNI where they, every week there is some meeting that is held and they get a 2-minute or a 5-minute window where they mention about their some technical topic or their professional achievements or whatever. And the members over in that BNI, they are not all chartered accountants, they are from varied businesses and different sectors. And this question had come up that they are getting undue advantage. And then this announcement came that unless that network is registered with the ICI and it comprises only of chartered accountants, such soliciting, such 5-minute interaction or whatever you might say would tantamount to solicitation of professional work and violative of the code. The next point is about members. Again, this was with respect to members registering themselves on, I think, Urban Clap and such apps, applications. where there were technicians and maintenance workers and event organizers, and everybody was listing, and there were also chartered accountants who had listed themselves. And then again, these guidelines came that it is not permissible for members to list themselves on such online application-based service provider aggregators. Educational videos, again, we find a lot of these videos on YouTube. You do a Google and you will find a lot of videos on any topic. So educational videos, they may be uploaded by the members, that is permitted. However, no reference should be made to the CA form wherein he may be a partner or a proprietor. So it is permitted, but cannot be used as a marketing tool by giving the reference of the CA form. Members may appear on television, films, and internet. We find tomorrow the budget is there on many of the channels. You will find our chartered accountant friends who are part of the being panelists on various TV interviews, or we'll find newspaper articles about their views, their feedback, their opinion on the budget that has been presented. And there will be a lot of things with respect to television, films, internet, or other media. So there also there are certain guidelines that you may give your name. You can describe yourself as a chartered accountant, but specialized qualification or specialized knowledge directly relevant to the subject matter of the program, you may also give that also. That direct tax expert, so CA Vishal Doshi, direct tax expert, or CA Jarvis by on indirect GST tax expert, or whatever GST expert, whatever. But firm name may also be mentioned. However, any exaggerated claim or any kind of comparison is not permissible. What he may say or write must not be promotional of him or his firm, but be an objective professional view of the topic under consideration. So when I'm in a TV, I'm there as a panelist. So I might be referred to Vishal Doshi as a partner, a direct tax partner with KC Mehta and Company. And it should end there. I should not boast about KC Mehta and Company, about the activities that we do, or the scope of work, or some assignments, complex assignments we have carried out. Nothing of that should be there. If I am there on the budget, I should give my views on the budget, and that's it, full stop, nothing beyond that. So these are what are the provisions with respect to such activities. When we go to the movies, now that the theaters are also opening from tomorrow, 100% new movies, we find that in the acknowledgements, actor, actress, सबके नाम आते हैं, chartered accountant firm का भी नाम आता है. So even when the first time I saw some time back, I was also in this actually this form, whether it is permitted under the code of ethics or not. So I reviewed that members' firms' name allowed in TV or movie credits, provided they are not mentioned differently from other persons. So as a part of the normal scrolling that happens of the name, the technicians and the support staff and everybody, even the CA form name I have seen, that is how it comes. There is no exaggeration or anything separate that is mentioned, and it is just that chartered accountants, and they give the form name, and it scrolls like any other name in that. So that is permitted by the code. Friends, these are some important guidelines or announcements of our institute. I have just listed them out so that whenever you get time or you are stuck, you can refer to them. Advertisement guidelines are there, council general guidelines, the website guidelines, restriction on manner of entries in directories, that is there, guidelines for use of CA logo, responding to tenders. I have taken some of them, the tender guidelines of 2016 over here, use of designation other than chartered accountant, announcement regarding abstaining from sharing of firm details intended for comparison of firms, advertising by members in practice, engaged in coaching, teaching activities. So all these guidelines are now forming part of volume 2 of the Code of Ethics 2019. I would request members that please, just whenever you get time or you need to, these are available on the site. Appointment as auditor. So here what I'm trying to say is, when you accept the appointment, it is with respect to communicating with the previous auditor. So we have to ensure, under the Companies Act, we have to ensure that I'll have to modify this slide because it gives reference to the 56 Act. It has to come on the 2013 Act. That as an incoming auditor, it is my responsibility to ensure that the notice was properly served on the member and the outgoing auditors. We have to obtain copy of minutes duly verified and signed by the chairman where the appointment of the new auditor is being done. The new audit firm has to obtain a copy of those minutes. And we also have to ensure, the firm has to ensure that proper appointment letters and that it is signed from a proper authority. So not by a junior accountant or somebody who is a data entry operator or somebody, but somebody, I would say, some of the one of the key management personnel, that is the CFO or the director, preferably the managing director or somebody from the board should sign the appointment letter, because our appointment is done first at the board, recommended at the board meeting, and then by the shareholders, and therefore it is better to have the appointment letter signed by the director or the managing director. But the incoming auditor also has this responsibility to ensure that all the formalities as the for appointment have been properly conducted or have been executed. Communication with previous auditor, this is something very, very, very important. And friends, I would like to share that I have observed that in many cases, and especially in case of the younger generation of the chartered accountants, in their, I would say, their motivation or their growth strategy, they keep on increasing the clients. They take clients. I would not, say anything negative. It's nothing wrong. But the only thing here is that please ensure that you comply with whatever are the code of ethics requirements of communicating with the previous auditor. Now, even email communication has been permitted because of the lockdown, and that has continued. So it is not necessary that you have to send by RPAD or any such thing. Even an email communication is permitted. So it is applicable to all type of audit. So whether it is tax audit, whether it is company audit, whether it is a bank audit, whether it is a C&AG audit, whatever it might be, you have to communicate with the previous auditor. Previous auditor does not necessarily mean previous year's auditor. It means the previous auditor who had executed the similar certification or issued a similar report. So let us say in case of a client, they have got a tax audit done in March 20. In March 21, somehow they are below the threshold limit and they don't comply with the requirements, or they are not, they don't breach any of the thresholds for tax audit, and therefore in March 21, they don't get the tax audit done. In March 22, again the tax audit is applicable and they have to approach another firm for getting the tax audit done. So in March 22, when that firm is appointed, they appoint a new firm. That firm cannot say that since in March 21 there was no tax audit, I need not communicate. No, because the tax audit in earlier March 20 had been done by another CA. That March 22 appointed audit firm has to communicate with the auditor who has signed the March 20 tax audit report. So it is not just previous year's CA, it is previous CA. Communication has to be done before you accept the audit. So before your acceptance, so it is not before signing of the audit report, but it is before you accept the audit, you have to communicate with the previous auditor. In case of government audit or bank audit, where you have to start work immediately, the new auditor can give conditional acceptance, making clear to the client that his acceptance is subject to professional objections by previous auditor, on the basis of which the final decision will be taken. So you have to communicate in such cases also. You cannot say कि time short था तो अभी मैं communicate नहीं करूँगा. No, you have to communicate with the previous auditor. You may give a conditional acceptance to the bank or the C&AG or the company where the appointment is done. The objective is that the incoming auditor would have an opportunity to know the reasons of the change in order to be able to safeguard his own interest. Mode of communication. Now there are multiple modes. Registered post acknowledgement due is there by hand against a written acknowledgement. So let us say I am from Baroda. There is some audit, or where some firm, instead of some firm, my firm is being appointed, I would send somebody personally. I would send typically 2 letters on the office copy. As we normally say, I would take the acknowledgement that he has received my communication. So that is what it is, that by hand against a written acknowledgement that he has received my communication. The third mode, which has been recently, I would say, allowed, and because of the lockdown and the post and everything was not working, acknowledgement of the communication from retiring auditors via email address registered with the institute or the last known official email address. So even through email, and I find nowadays a lot of communication of, or typically NOC, as we might say, happens through email. And the fourth, though not yet launched, would be through UDIN, generated on UDIN portal, for which guidelines are yet to be issued by the institute, but they are already forming part of the regulations, and therefore it is there but yet to be implemented. So because of these four, there are a lot of modes that have been prescribed. I personally do not see any reason why there can be no communication from the incoming auditor with the retiring auditor. Outstanding undisputed audit fees, again, the assignment cannot be accepted if there is any outstanding undisputed audit fees. You cannot, the new auditor cannot accept the appointment. So, what is the meaning of undisputed fee is something which is provided in the books of account, which is signed both by the auditor and the auditee. So in many cases, I would suggest that even if you are doing tax audit, many times what happens is that tax audit appointment late hota hai, and then there are those TDS considerations. TDS deduct nahi kiya hai, to hum log fir next year billing karenge, this, that, all those happens. And I have seen a couple of cases where members have approached me that in the next year he changes the auditor, and though you have a claim for some portion of the fees which was not provided for, but because it is not outstanding as per the books of account, we cannot say it is undisputed, and therefore your case before the disciplinary committee would become weak. Therefore, it is always important that in such cases, whatever is the fees, either you can take an agreement signed by both the auditor and the auditee, a proposal letter where he confirms that okay, these are the fees and all, that is fine, or please ensure that necessary provisions are made in the financial statements which you are signing off as the auditor, because you don't know what's going to happen next year, and especially in case of companies where the appointment is not for 5 years. In such cases, the risk is higher. Contingent fees, we all know that we cannot take fees which are contingent on the outcome of our assignment or whatever it may be. But I will now say that there are certain exceptions under the regulation 192. I will go through those exceptions that where you can have your fees contingent on certain value or certain amounts. Receiver, liquidator based realization of asset, valuer based, in all these cases, debt recovery services, you can have contingent fees. Auditor of cooperative societies basis working capital, gross net profit, in such cases it is permitted. Management consultancy services which are approved by the council basis percentage basis contingent upon the findings or result of such work. Certain fundraising activities, the fees may be, see, I'll just say these are policies, but I'll give an example that whether you are going for a commissioner appeals or a tribunal hearing, you have taken that assignment, and whether you can say that the addition is 1 crore and then whatever is the reduction in the demand. So I would say the tax liability, the demand is of 1 crore at the earlier level, which has been gone into appeal. And you say that, if you are able to reduce or give relief, provide relief or get relief for that client to the extent of 40 lakhs, then your fees you would put as a percentage of 40 lakhs. No, that is not permitted, because that is again dependent on the outcome. But yes, you can definitely put your fees as a percentage of 1 crore, because that 1 crore is an ascertained amount. It is not a contingent amount. Similarly, when we talk of a loan syndication, where you are working with your client to get a loan, whether in such cases you can say that whatever is the sanction amount or whatever is the disbursed amount, whether you can put a percentage of that. The code does not allow that, the regulation does not allow that. What is allowed is that whatever is your proposal, let us say you are putting a proposal for a 50 crore loan. So that 50 crores is your proposal. It is not contingent. You have done all your workings or valuations, the feasibility study, whatever it might be, everything based on 50 crores, and therefore it is a percentage of 50 crores. So that is not linked with the sanction amount. The sanction amount can be 40, 45, it can even be 50. I'm not denying that. But your proposal or your fees has to be on the amount that the proposal for which you are working for, and not on the sanctioned or the disbursed amount. So this is what is the way in which, so there cannot be any contingency amount on which you can base your fees upon. Friends, I would say, take this opportunity of just highlighting that we have a lot of these FAQs put up by way of videos on the WRC website on the code of ethics. There are 11 videos that have been released, and I would be releasing the next video hopefully tomorrow. We release on the 1st of every month. So I would take this. These are the links that have been given. You can go to the WRC website also. And since we are on the code of ethics, I thought it good to share with members that the WRC videos on code of ethics are also available, which have all these FAQs, and a lot of questions that you might have in mind are answered by way of FAQs on those videos. So you can kindly go through that, and that would definitely help you. So with this, I thank all the participants for a very patient hearing. And in case there are any questions, I would be more than happy to answer them. Thank you. Over to the organizers.
Thank you, sir. Members may ask their queries. There isn't any question, sir.
The subjects today on the standards on audit and code of ethics are such which we would normally not get any queries. Especially when we are doing it on the 31st of January.
Especially on Sunday.
That's Sunday, yeah.
Members may ask their question through chat box.
I think everybody would be eagerly waiting to get to lunch.
Shall we propose vote of thanks, sir?
Yeah.
That is, I request Sumit sir to propose a vote of thanks.
Go for it. Go for it.
Huh?
Thank you so much, Navsari branch of WRC of ICM.
You're not audible. You're not audible.
Sorry, wait a minute.
आवाज बहुत स्लो आ रही है.
अभी आ रही है? Hello.
Slow आ रही है सुमित.
Hello. Yes.
Maybe you can, Sumit, you can come a bit nearer to that instrument, that handheld that you have. That might improve.
Am I audible?
Yeah.
Am I audible?
Not yet audible.
Okay, Sumit, I will.
Yes, sir.
Check with your mic.
All right, I
Mic
will.
setting.
Firstly, I would like to thank Navsari branch of WRC for giving me an opportunity to propose vote of thanks. I would like to thank you, Sripal sir and Vishal Doshi sir, for taking out time from their busy schedule, especially on Sunday, and enlightening us with knowledge. Thank you so much, sir. I want to thank whole management committee of Navsari branch of WRC who really work hard to make this webinar successful. Also, thank you all the members present here for paying your attention and learning. Thank you.
Thank you. Thank you very much. All the
Thank you,
best.
sir.
Thank you,
Have a great
Vishal Bhai.
Sunday.
Thank you, Sipal Bhai.